and then they're going to start the live stream. Great. We're on now. Great. And the audience is just going to flow in 1 minute's time. But it's really great to have all of you here. Thank you so much for being with us. Just quickly, thank you to the early risers who've joined us, who found the room, first of all. So we must applaud the speakers for finding this room, because thank you. Because we are, for anyone on the live stream, we are kind of hidden in the back of the first floor of a building. So congratulations, everyone, first of all, for making it here. You're all winners already. And also a big thank you to the Trade House, to UNCTAD, WTO, and ICC, and ITC, I believe, too, for bringing us all here together and for hosting us at COP today. And of course, Ashley and the team here, thanks for organizing everything. We really appreciate it. So we always have 2 panels for the last 3 years at COP, and we discuss multiple things at COP, but in this panel particularly, which is actually Harry's 3rd time on this panel, so thank you very much for joining. You know how it goes. We always have a big panel of people with really great experiences to share, and we talk about action. And we really want to understand, really on the grounds, what's happening and what are the activities that need to take place to move forward. So since we are starting with action, I'm just going to get into it. And I want to hear all of you, from all of you, what needs to happen and what we're already doing. So I'm going to start with Alicia Kedzierski, who is the head of the ESG department of the FCA, the Financial Conduct Authority of the UK. And I want to start with you because I want to start with regulation. And we have heard a lot about regulation here at COP. So not just with the IFRS Foundation's latest standards and the need for moving on regulation. We're also hearing of new task forces that are being launched to help with net zero, to make sure that we have the right policies in place and the right regulation. So you're in a bit of a difficult position now where you're going to have to work really hard, I guess. So I would like to know from you, really from the action side, how is FCA addressing the new IFRS standards? And beyond disclosure, what more is the role of regulatory authorities, and where do you see kind of moving forward from this COP onwards? Thanks, Alicia.
Thank you, everyone. So no pressure at all. So yes, I head up ESG and D&I, so I got all the highly non-controversial topics for the FCA. In terms of where we are, it has been a very busy week for us, because actually last Tuesday we launched a labeling regime, SDR, in the UK as well. So it is a period of immense sort of change within this area. One of the big things for us is around consistency and a common language, which I know will be coming up a lot with everybody over the coming days. But obviously ISSB forms a part of that, working closely with IOSCO. But I actually am going to go in a slightly different direction, which is one of the big priorities for us in the coming year, I think in particular, is also embedding or operationalizing what is already out there. We're getting so much within the regulatory space. We have an incredibly packed agenda. We have 40 live pieces of work happening within our department. But there's an element of taking it from just putting out rules, and I've been both on this side as a regulator, but also out in the market. You can't just keep pumping out rules. They have to be actually leading to real change. And for us, one of the big things is going to be around looking at what we are currently referring to as strategic embedding. We might come up with something snappier in the next year, but it's looking at firms taking this from being just about compliance and ticking those boxes of I have met all of the different regulations out there, to truly making it part of how they run and how they operate. Because I think actually in many ways there's a huge amount of work that's been done on creating the common language, implementing it as many jurisdictions as we hopefully will in coming years. But what will be really important is firms actually creating that link into their DNA, and regulators also being able to regulate that. So we also have a lot of internal work to make sure that our people, you know, we are an organization of over 4,000. All of them now need to upskill on everything around climate change, on everything around this language, because those of us here at COP, we're all speaking it all the time. But actually, it's that bridge between all of us who are speaking it all the time into the rest of our own organizations that is going to be really critical. So that will be a big part of the next year. Obviously, data, you know, and we can reel off all the other pieces around that. But actually, even in that space, I think there's been a focus by many on getting new data tools on, you know, if I could just get the perfect kind of data into the organization, versus the hard work is actually taking what you've got and what is out there and sitting down and analyzing it and making sure you understand it for your own business model. So I guess maybe that will be one of my last points, which is around this is taking it from the overarching in general into the very specific of what each company needs, what each jurisdiction needs. And in many ways, that's where the hard work really begins. I think maybe one other thing that I would highlight is the need for that international cooperation, which obviously I know many on today's panel will discuss. What I mentioned yesterday, actually speaking to the industry, was people don't see how much of regulation is actually that international cooperation. It's speaking to your counterparts, because often in a given country you are the only one tackling an issue, but it's your international community and the need to make sure that there's evenness between all kinds of different economies as well.
Thanks, Alicia, for that great segue. So obviously, we do have a great representative here today to talk about the international perspective, but I really like what you brought up with the common language, and I think we also will have, you know, great points on that later today, but really bringing that from the global common language to then reaching each jurisdiction and, as you said, making action happen and really moving forward with that. So I'd like to then come over to Jinder Singh, who's the Deputy Secretary General at IOSCO. So we have a great representative here to take that perspective. Can you share with us what IOSCO is doing to take on that mammoth role of ensuring that common language globally, but helping regulators move forward on the ground?
No, thank you, and thanks for having me here. So indeed, as far as the work that is happening with regard to addressing climate, the challenge that is coming from climate, I think if I step back and look at what we are doing as regulators together, what we are really doing is to try and ensure that there is trust in the system, and that's what is then needed that allows things to go forward. And so there are different components of that trust. That common language that you and Alicia talked about is indeed a big part of that. And with the ISSB standards that were finally issued this year, we moved quite quickly, but rigorously, to endorse them. And so that already is a big signal to regulators in terms of, you know, how they adopt them or apply them or otherwise make use of them. So that's something that we are very, I think, proud of. That's a very significant achievement, because it was around 20 years ago that we had done similarly with regard to the IFRSs. And so that was a big move, and it is after 20 years of that it comes every so many years. And so this has happened, and I think that's a big signal in terms of making sure that that common language that Alicia talked about, that you talked about, actually then gets taken up. And we are talking in the context of exchanges. So exchanges, of course, have a big role to play in that context in terms of encouraging issuers to adopt and to go for these standards, because you will notice that our endorsement also talks about voluntary use of these standards. So even if there are no rules in place, there is something that can be done to encourage that these standards are actually taken up. So that's something that has happened on the side of the standards themselves. But then going forward from there to assurance, and Mark, I can see here, has played a big role in IOSCO, and thank you, Mark, for that, in terms of moving forward with the assurance piece, because we didn't, as we were getting engaged with the disclosure piece, we didn't wait for all of that to happen before we started to move on assurance. We said, trust needs not only information to flow to the investors, but trust also needs that information can be assured. And we therefore issued a call to the IAASB and ISBA, the International Audit and Assurance Standards Board and International Ethics Standards Board for Accountants. And I'm glad to say that they not only heeded our call, but they actually wholeheartedly embraced it. And they are moving forward. The IAASB has issued an exposure draft already, and we are already engaged with that in terms of seeing, is that standard also something that we can say is fit for purpose? So that's something that has happened on that side. With regard to, going back to the theme of trust, with regard to greenwashing, we had issued a report in 2021 about asset managers and ESG ratings and data providers. And then we moved forward from that into last year and this year to see how can we actually encourage the industry by issuing a call for action for them to take these up as well. And we've also, met with supervisors and tried to see how they are moving forward with regard to implementing those types of recommendations that we have issued. And it's very heartening to see how much movement has happened, how much progress has happened with regard to even voluntary take-up, or even in terms of regulation, the ESG ratings and data providers. We've had codes for conduct that are, I'm glad to say, mirroring what we said in our recommendations. But the last thing that I want to touch upon is probably, I would say, the most relevant today, because only yesterday we launched our consultation paper with good practices on voluntary carbon markets. And that was also a piece, again, you have the word integrity written all over it, and trust as well. And so we've issued a set of 21 good practices with regard to these voluntary carbon markets because of the role that they can play. They've been around for 20 years or so, but I think their scaling up needs much more trust to be there, because we know that there are conflicts of interest there in those markets. And therefore, what we've done is we've looked at it and we've seen that there are clearly two pieces of integrity that are important in these markets. So clearly there is one about environmental integrity in terms of these carbon credits, but there is also the aspect of financial integrity. And therefore, our 21 good practices go in the area of ensuring financial integrity in these. And I would encourage, therefore, everyone to look at that report, to engage with that report, because that's something that we will seek to finalize next year. So that's essentially the big areas that we have been covering in terms of ensuring that there is trust in these markets.
Thanks, Tejinder. And for anyone who missed that launch yesterday, we were very pleased to participate in that launch yesterday. Great paper. I'd like to stay on that theme of trust. And I think I'd like to come over to Marty to continue in that theme. So Marty, can you talk to us a bit about the next phase of the standards and how you're working, how your team's working in order to build that trust in the market?
Certainly. Thank you, Tiffany. And thank you very much for having us along today and for all of your ongoing support, everyone, with the adoption of our standards. So S1 and S2 came out in June, our first inaugural standards of the International Sustainability Standards Board. And thank you to IOSCO and everyone here that got behind us, because we couldn't have done this without you at the pace that we managed to achieve that. The next phase for us is twofold. The first is we recently consulted on the agenda, what we're going to do beyond climate and what pace we're going to work at. And the board is currently reviewing all of those 400 submissions, which covered integrated reporting or integration in reporting, biodiversity, ecosystem services and ecosystems, human rights and human capital. And they're discussing those openly in the board meeting starting next week, I believe, for the next few months. So they will have positions on what they're going to be focusing on next. So from a standard setting perspective, that's where the standard setting work is going. The technical staff are also, we did hear loud and clear that we know climate doesn't stand alone, and there's work, we all know biodiversity intersects with it, where land is an issue. From your climate disclosure, you need to report about that. So we're developing guidance on the nexus between some of these issues and the climate standard, so S2. So that can then again support preparers in the absence of a standard. But if you cross the house, if you like, away from the technical staff and the standard setting to my world in capacity building and strategic affairs, we've got several-fold a task ahead. You heard Tejinder, he mentioned voluntary and mandatory adoption of the standards. So we're working very hard to secure that mandatory adoption and working with regulatory authorities around the world to do that. And we're also working at that bottom-up market readiness, voluntary support and uptake. And so we launched a COP27, a capacity building program. We recently published our year report. We have a huge raft of partners, of which I'm really glad SSEI is one, as long with WBCSD and others in the audience here today. And we've managed to achieve an awful lot in the first year when we didn't even have standards for 6 months, let's be honest. The community got behind us, started to get organized, and are really starting to help us deliver, because we can't do this on our own, right? And we shouldn't be doing this on our own. We should be working with others to leverage and scale. We don't have time. You know, we spent 5, 6, 7 years sort of on TCFD, didn't we? And we sort of didn't really progress that and get it to where we needed to get to. So we all have to work together on this one to get us there. And so, you know, really exciting for us. And, you know, this is tomorrow's maybe thunder I'm stealing right now, is it, Tiffany? But one of the most exciting things we're doing. And this is an ongoing collaboration I've had personally with the United Nations Sustainable Stock Exchange Initiative. But we're managing to, we had the TCFD training for years and years, and we talk about the nearly 25,000 people we managed to train through that program. And it was a COP last year after Anthony and Tiffany said to me, Marty, it was so successful, let's do it again. But let's do it with our S1 and S2. And so we've already piloted that with 2 exchanges. So thank you, Singapore, for being our very first pilot online. And with Euronext in Dublin, and we did that in person. So we think we've got a pretty good product now, ready to roll out to exchanges around the world. So I guess my call to action to all of you is get in touch with Tiffany and sign up, please, and get your preparers ready for what's coming, whether that be voluntary or mandatory.
That's great, Marty. I was just going to follow up that with what do you need from exchanges, but you've already foreseen my question. I did notice, though, so I think Marty needs no introduction, but I did forget to introduce her. So for those of you who I imagine nobody in this room does not know Marty, but Marty McBrien is the Chief of Strategic Affairs at the IFRS Foundation, and we're so pleased to continue to work with you, Marty. Thanks so much. And you also did a great segue onto Harry. So Harry is from the Singapore Stock Exchange. Harry is the Sustainability and Sustainable Finance Head at SGX and has joined us for 3 panels now on this topic of how do we get action moving forward. So I wanted to come to you about that first training, but then so much more that you're doing in Singapore. So it wasn't just our training they hosted. You had your own training as well. You're looking at doing more. There's also a lot of movement in Singapore in this space. So kind of what's the secret? How are you managing in Singapore to move so quickly on this topic?
Thank you so much, Tiffany. And golly, how far we've come since 3 years ago in COP26, right? If we look back, we've done a lot. So just 3 components to talk about. Can everyone hear me? Okay, great. First of all, about disclosure and setting a level playing field, if you'd like, on disclosure and ensuring there's a level of harmonization in the disclosures that are made around material information. Secondly, mobilizing capital, and there will be other products that develop around that. For example, risk management when it comes to financial products. And thirdly, very importantly, on collaboration and supporting the setting of credible standards. So firstly, on disclosure, indeed, we were the first market to run the ISSB training, with many thanks to SSE, World Bank, and ISSB. Very, very delighted to have partnered. We had 330 participants in that training. I didn't know the total number of people who did the TCFD training. You said 25,000, of which 2,200 were from Singapore, so we're about 10%. Yeah, so we find it very important to support the work that's being done for ISSB. We are also the first market to have done the public consultation on the finalized ISSB standards for mandatory adoption. And that's for Singapore companies overall, not just listed companies, in fact, but all companies of certain size that are private as well. And so the team's very, and that's not just Singapore Exchange. So we're quite busy taking on board all the comments that's received there. There will be specific consult, just specifically looking at what's needed from listed companies in due course as well. So our RegCo division, which specializes in regulation, is very busy preparing for that. Second component on mobilizing capital. At the end of the day, exchanges, all of us are here because we're looking at how to mobilize the capital and create the right tools for today and over time, so that the overall ecosystem, companies who are coming to the exchanges to tap into the capital markets, both those who are tapping into it and the investors who are looking to invest, they're ready, and we are ready. So if I could give a couple examples, one that we've been focusing on quite a lot has been on mobilizing capital through exchange-traded funds, for example. And we've had launches of, in the past 2 to 3 years, anything from green REIT indices to low carbon indices to very recently around climate action, which is an index which is a bit more forward-looking, very, very importantly, forward-looking. Doesn't matter where you are today, you might be a high emitter, but if you have a plan, right, you have targets, and your management is aware and you're aware of what your green revenues are, then there are certain higher scoring that gets given, and top 50% of each sector gets included, and then sort of is a market cap based index. What's important about that is that it is a reflection of the real economy. It is there is sector diversification as well. These are some of the key components that asset owners are calling out for when it comes to the index world. For example, the Net Zero Asset Owners Alliance have published a paper on 10 principles around net zero benchmarks, which specifically stipulate these points. And so, of course, this is an expansion from Paris-aligned benchmarks that has already been adopted in around the world, and in particular in the European Union. So, you know, how do we actually get inclusive of emerging markets in the mobilization of capital is where we've been focusing on quite a bit, and that was in partnership with MSCIs and 30 different asset owners around the world, and then launches of derivatives products on the back of that as well. Transition planning is going to be extremely important in having the right information for mobilization of capital as well, so the disclosure does not end there. It's very needed for getting the products right. You can't even start to think about products for risks of greenwashing unless the disclosure is there as a level playing field. So we very much so commend the work that the regulators and parties are working together with the likes of us. The third part I just wanted to cover was on collaboration. So we've been deeply involved as one of the 2 founding members of exchanges for NZFSPA, Net Zero Financial Services Providers Alliance. And we are very involved in the GFAN's leadership team as well. So that level of collaboration where we're sharing with each other, learning from each other, extremely important in setting the right tone and having a level playing field.
Thanks so much, Harry. And I particularly like the idea of us are needing to look forward now and helping companies to look forward and not so much judge them just from past information, which is what I think our disclosures are moving towards, and including that a bit more. Maybe we can look forward to the next COP and see what we might be announcing then. Hopefully some targets that have been set and achieved by the Singapore Exchange as well. I'd also like to move a bit closer to the region, to the Saudi Exchange. We have with us, we're very honored to have with us Mr. Bandar Al-Blehed, the head of client relations development at the Saudi Exchange. And we're hoping to work very closely with you on net zero moving forward as well too. Can you share with us in your region exactly what you're having to work on and the activities that you're moving forward on for the future?
Yeah, absolutely. First of all, thank you so much for having me here. It's great to be with you and with the distinguished guests. As you can see, if we look from the MENA region, today we have 2 COPs back to back, and this just tells you how serious and committed the region is. Focusing on Saudi Arabia, I think the kingdom, the government has committed to net zero. And after that, we've seen more and more private and public companies commit to net zero. This is very important. And although sustainability, generally speaking, and climate action specifically is a new consideration in the region, we've seen some impressive improvements on all the fields, whether it's on the disclosure side, whether on all the work that is being done from the social, government, and environmental side. So we're very proud of this. Some small numbers just to tell you how the improvement is. If we look at last year, only 8% of the publicly listed companies in the kingdom had some sort of ESG disclosures. Today, it's 30%. So that's a huge increase in just a very short time. And that's because of many things. First of all, we're proud members of the UNSSE. We're also working with the UNSSE around with our partners in the Arab world through the Arab Federation of Exchanges. And this has helped us a lot to learn what are the challenges in the region are, but also how we can tackle them. So one of the major things that we have seen is that the lack of knowledge, the lack of awareness, and also the fear of what is it, what I can do, and especially how costly it will be for us. So we decided to do a lot of training. We did already training with our colleagues at SSE, and we're going to do one actually next week as well for the ISSB. So it's very interesting. In fact, it was so exciting last time. The Q&A session lasted for over an hour. And that just tells you the level of engagement that we're having with our issuers and companies. So having said that, training is very important. We've done several of these. We're also doing one-on-one advisory sessions with our companies. This way we can showcase how they're performing and show what the peer performance is and what's missing from them to be as par with their peers. And it has been very, very interesting. Many of the leaders of these companies, they're speaking with their people and say, hey, why aren't you doing this? So it's just the awareness, just telling them this is important, this is how you can do it. It's very easy. It's not as complicated as you might say. They're asking us a lot of questions about the standards of the world. But I say, listen, at the end of the day, if you're lowering emission, if you're more efficient, it's better for you and your company. Don't think about the other things. And we've also realized that a lot of the companies in the region, but Saudi Arabia specifically, are doing some fantastic things, but they're not disclosing it in the right venues. So it's our job to help them disclose these things. We're developing tools, and they're going to be live very soon. We're developing the guidelines. We have our guidelines already here, but I think it needs an update very soon. So there's a lot of work towards that front on the disclosure side. On the other side, we're also signed the trilateral agreement between the Saudi Tadawul Group, the Ministry of Economy and Planning, and our regulator, the Capital Market Authority, to develop three things in the kingdom. Number one, the Saudi taxonomy. Number two, the Saudi ESG standards. And number three, tools and awareness materials and training for Saudi Arabia. And lastly, I don't want to speak a lot. We've also had our voluntary carbon market. It has been established last year between our sovereign wealth fund, the public investment fund, and the Saudi Tadawul Group. The voluntary carbon market is very important in the kingdom. There are a lot of companies, as I said, that have committed to net zero, and this will help them transition, at least in the short and medium term. And we've done already 2 auctions. Each one was the largest in the world. The last one was 2.2 metric tons. And we expect a lot of demand in the future. We're talking with our companies, and they're very excited. They have a lot of demand, and our role here is to provide the supply and to provide a transparent market for Saudi Arabia, but also for the region.
Thank you so much for that overview. It seems you're busy as well, and we appreciate how quickly you jumped on the offer for training. So we opened up our training just originally to a small group of stock exchanges, and Saudi Arabia was one of the first to reach out and say, we would like to host training as soon as possible. So I think it's December 12th we're hosting.
Correct.
Yeah, great. So we're looking forward to having that training together. Now, we've heard from regulators and from stock exchanges about a lot of training and education and capacity building, but we've been introduced to products, but we haven't talked so much about the infrastructure. So I want to get into the infrastructure a little bit, and I'd like to come to Francesco Vanni d'Archirafi, and I hope I didn't butcher that too badly. My Italian is not great. Who's the group chair? No, sorry, group chair of Euroclear. So what role do you think that financial market infrastructure like Euroclear can play in scaling sustainable finance and climate finance in particular?
Well, first of all, thank you for having Euroclear around this August panel, and we're delighted to be the last ones to join your group. I mean, it's also the first time we're a COP, so we're here to learn, to hear. There are so many initiatives, and it's really great to see how ambition is being transformed into action, not only by listening to all of you, but by reading all the announcements every day of the COP. So congratulations also to the presidency, because I hear it seldom that, you know, the first day you already start with very major announcement. But let me talk about Euroclear second. We are a neutral, open, horizontal post-trade global financial market infrastructure. We are connected with most of the people in the room. And, you know, we also felt at the board that to accelerate our ambitions to help the markets, you know, raise more financing for the net zero transition, we also had to raise our ambition. So what we've done, we've put sustainability on our purpose. So we say we innovate to provide, obviously, safety, efficiency, connections to the global financial markets for sustainable growth. Now, I would like to talk 3 points where we feel we can be part of the change. The first one is that certainly infrastructure can reduce borrowing cost. Much of the many trillions that will be needed per annum to invest in a zero transition is required by developing markets in the South. And you know, the numbers are also going up very quickly. I've heard 3.5, you know, during the last 12 months. Yesterday and the day before, it's 5 billion per year, etc. But all these countries need access to finance at the lowest cost possible. And we have done a lot of work to analyze and understand when a country issues through us, and we believe that the save is around 30 basis points for a sovereign issuer and 14 basis points for corporate issuers. So if you multiply that by the trillions of dollars that need to be raised every year, those are important numbers. And I think it's a responsibility to try to deliver the efficiency, the safety, and the connection of our platform to those issuers for you know, maximizing the opportunity of raising financing. Secondly, we think we have a role to play to provide transparency. You've all talked about standards, disclosures, information requirements, and the taxonomies today, let's say, are multiple depending on where you sit around the globe. And so holding around 40 billion of assets on our platforms, 40 trillion, sorry, of assets, and processing every year the equivalent of a quadrillion or 1,000 trillions or 1,000,000 billions, we think that this is very important also for us and our entire ecosystem. So where we don't have the capabilities, what we normally do is identify the gaps, and then we partner or we invest in new companies that have those capabilities. So recently we purchased, as you probably know, a company called Greenomi and another company called Impact Cube. And the ambition is that these companies can really assist our entire ecosystem with information, not only on ESG reporting from issuers, like the EU taxonomy, CSRD, but also for asset managers and investors, like, again, the EU taxonomy and SFDR. Finally, I think there's been a lot of talk about the voluntary carbon credits in the last few years, in the last few quarters, in the last few months, and in the last few days. And you've all also looking at this. And so the question is, it's a bit too early, because that market is developing very quickly, but at a certain point, when there are standards that become clear, maybe the infrastructure, the post-trading infrastructure like us, could also contribute to the discussion so that these markets scale as quickly as possible, which I think are another big contributor of getting to net zero as soon as possible.
Thanks so much for that. And just to clarify, the standards you really see as the empowerment to future infrastructure. So we need those standards to be clear from
Yes,
the.
and also to avoid fragmentation of standards in the marketplace. That's what I meant.
Great, thank you so much. And I think let's stay on the idea of infrastructure and markets, but move to derivatives. Owain, thanks for joining us again this year. Owain Johnson is the Managing Director of CME Group, a derivatives marketplace, so top derivatives marketplace. So thank you so much for joining us again, Owain. And I wanted to have the same kind of question for you around market infrastructure in the derivatives space. What role can and should market infrastructure play in scaling climate finance?
Yeah, so it's a very lovely question, and thanks for having me. So we face slightly different challenges as a derivative exchange in that we rely on the fundamental nature of the market to develop, because we are relying on commodities particularly to become mature before we can list a derivative on them. So I guess one of our core challenges at the moment is the tension between physical market development and the need for derivatives to manage risk. So you end up in this chicken and egg scenario sometimes where we've got people in the hydrogen market, we've got people in the voluntary carbon cook stove market coming to us and saying, we would like to manage risk and we would like to see a forward market develop so that we can take those prices to a bank and get finance. But for us, following core principles, we need to be sure that the physical markets are broad enough, deep enough, and not susceptible to manipulation so that we can list that product. But if we don't list the product, the physical market struggles to develop sometimes. So you end up in this tension where, is that market ready for derivatives, which will be helpful? But at the same time, can we ensure that people who invest in those derivatives are basing it on a liquid, trustworthy physical market? And there's a real tension there, and I sadly don't have the answer. But that's an area where we're on the bleeding edge at this point. And we found that in some of the success we've had has been in battery metals and voluntary carbon and bioenergy. So those areas, particularly cobalt, lithium, I feel like we've got the timing just right, and we've come in as the markets have become liquid, and we've helped to take them to another level. But there are other markets, hydrogen again being a good example, where the demand is there, but the physical market isn't ready. So CME runs the risk of front-running the market development, even though we'd love to be at the forefront of developing those environmental markets. Just to kind of sum up with one more challenge. The challenge we always have as an exchange in the derivative side is that the customers ask for liquidity, but by definition, liquidity is low in new and developing environmental markets. So my counter to this is CME has made the commitment to waive our normal economic standards for listing. So in the old days, if I didn't think a product would make a certain large sum of money, I shouldn't be listing it. And we've waived that for environmental products. That's been our commitment. We want to get ahead. We want to support the transition. So we've waived those standards. So I turn around to the customers and say, why don't you waive some of your liquidity standards? If you want these markets to develop, you cannot wait until they're trading 10,000 lots a day to get involved. Trade a 5 lot, trade a 10 lot, help these markets to develop, and they will get to 10,000 lots a day. But if everyone sits on the sidelines, they never will. So I feel like sometimes also as exchanges, particularly on the derivative side, we need to push back on the customers and say, get involved early. We're trying to be involved early, albeit with those challenges I described. Join in, get involved, and we can make these markets work.
Thanks, Owain, for your leadership in that. And I applaud you for pushing back. We do have a lot of, advisory services and client services here with us today, whose job it is to work directly with the customers that are listed in their exchange, like Brian, who's here, and I'm going to come to you next, Brian. So Brian Matt is head of ESG advisory at the New York Stock Exchange. And so I want to talk a bit about that advisory side and your interaction with companies. And anyone who's not subscribed to the ESG Top 5 newsletter that Brian puts out, I highly recommend it. It's fantastic. But what are you doing?
Today on a Friday
Yeah.
afternoon, but,
What are you doing to advise your clients and to maybe push them a little bit on this topic?
I think a nice part here, I've worked with 2,400 listed companies out there that, of course, contain many of the leaders across each industry. With some of the
Hold it quite close to your mouth.
some of the some of the leaders across each industry, some of the ones that have been most. Is this? Is that better? Better? Check. There. Now we're on. Excellent. So to start again, 2,400 listed companies. Of those, many of the leaders across each industry that have the most developed and in many cases have been doing this type of sustainability work for 10, 15, 20 years. So the nice part there is out of those 2,400, I've got about 1,000 that have some type of dedicated head of sustainability, some type of dedicated program. The remainder are doing this sustainability work part-time or don't have an individual dedicated to it. So the nice part there is we've got the ability to tap into who really are the experts in this space and what are they thinking about. So I built a sustainability advisory council that has members of across every industry that usually 10 plus years experience, folks that know what they're doing and have built out programs from brand new to really becoming experts in the space. We can bring from them best practices and how other companies have built programs out to the smaller companies out in the space. Then I also talk a lot to pre-listed companies, those that might have a public exit in their future, might be sitting in a private equity or a venture capital portfolio, that now need to think about what's it going to look like when I'm out in the public markets. And of course, I have to be transparent about what I'm doing in that space. And I think that's really where you tend to have just a greater impact overall in introducing companies to what the demands may be from a public equity investor. So a few other things that we can then do within my parent company, Intercontinental Exchange. MYC is part of a larger organization. Intercontinental Exchange is involved in collecting data around just ESG reference data, the information that companies make available on E and S and G, as well as climate transition data, the emissions data today, as well as climate transition plans that have been laid out by companies. Also around physical risk, we've built out programs that help companies look at their own approach to physical risk of their assets. So we can take some of those data sets, some of those data points, and make those available for companies for benchmarking purposes out in the market, just to let them see what will they look like in a portfolio and what are investors likely to bring up when there may be potentially an outlier in those portfolios. So that's a couple things that we do. After that, I try to spend a lot of time with those sustainability officers. I try to listen to their concerns. We did a large event this year, had about 130 sustainability officers in a room together, Chatham House. Everyone learns from everyone else. We also did, this will be our 19th, we're doing a session tomorrow, will be our 19th small roundtable with sustainability officers across companies. For each one of those, you can publish out, this is what that community is thinking. These are some of the challenges that they're facing. Sometimes these are the success stories that companies have when it comes to those programs. After that, education, as you mentioned, a guidance program that we've built out, and then also just connectivity with other standard setters that exist out there. I did want to get to we've talked about voluntary carbon markets here. Obviously, ICE is in the future space as well when it comes to different types of both renewables as well as carbon allowances, carbon credits, et cetera. And that's something else we've put some work into recently to, again, hopefully improve confidence and improve both the supply and demand of those markets. I think we've done some education work on that front too. But in the end, I think over the long term, I think we'll see sustainability officers from that 1,000 I have out of my 2,400 today. Eventually, we'll start to see those, that role exist in just about every company. But then those sustainability officers are responsible for educating the rest of their businesses. And I do have a lot of them tell me they're essentially building their own retirement plans. They're educating the legal teams, the HR teams, the rest of the business to really embed sustainability into what they're doing on an operational perspective. And that's really what excites me about working in this space.
Thanks so much, Brian. I'm glad you brought it to that kind of whole of organization perspective, because I mean, you work with sustainability officers all the time, and I'm sure you've seen their role evolve hugely since you started in this space. And we're seeing that with the IFRS Foundation standards too, where we're starting to now say, okay, it's not the sustainability officer's job to do this. We need to get the whole company involved in this. And we are a group that likes to share practices and peer practices, and one of our stock exchanges a few years ago did start a chief sustainability officer training program. And as they developed that program, they actually started to realize that having a chief sustainability officer is sometimes counterproductive. Rather, they become the one person who's responsible for everything, and they're the roadblock then because they only have so many hours. How are you, maybe just a few more moments with you, how are you seeing that role change, and how are you helping them through that? What is the stock exchange's role in helping connect maybe finance and sustainability, risk, and future-looking ideas?
So the first set of these, when we got out of COVID and started getting small groups together, we would assemble who is the nominal head of sustainability or ESG for an organization. My first 3 of those, I had 65 attendees. I had no 2 titles the same across any of those. Some came from EH&S, some came from finance, some came from, there was one chief administrative officer, I was a chief accounting officer. Everyone comes from different parts of the organization. So each sustainability officer comes in with different backgrounds, and oftentimes they're given that set of responsibilities, but also need to have as senior a support level as possible. I think what I've seen over time is that is now not just reporting more to CEO, CFO, to more senior management, as opposed to just being a compliance function or a marketing function. I've had investors tell us before, if I see a sustainability function reporting just to marketing, that might be sending me the wrong signal, as opposed to someone that's embedded in company strategy. Then I've also seen those groups really be the educators across an entire business and help the rest of the business, help finance start to gather information the same way they would gather financial data, apply those same controls and processes to gathering non-financial data. So a lot of what we're doing is building that network, building that community, and building the educational processes that help companies wherever you happen to be in that structure.
Thanks, Brian. Francisco, you wanted to add to that?
Yeah, I just wanted to say that, if you look at the attendance of COP28, where you have the private sector at the CEO level, the public sector head of states, the philanthropies, the biggest ones, et cetera, the non-for-profit, I think it's also very important to start from the top of the governance food chain, right? So that's why we've put it on our purpose, on our vision, on our strategy, but we've also embedded in the governance, regular governance of the company. So the audit committee has a responsibility, the risk committee has a responsibility, the remuneration committee has a responsibility, and that's really been put at the food chain, at the priority level in how we govern the company. And we feel that that's also very important. And then if that happens, and the executive also do what you just said, I think that's really how you accelerate, because obviously our clients, our suppliers, our ecosystem, our shareholders, they all want the company to move in the direction. So there is perfect alignment, and I think these type of panels are also a bit of an accelerator or enable institutions like us to come and learn from you. So thank you.
Great. Well, thank you for joining us. Euroclear is our newest SSE supporter, so thanks for joining the team. We hope to continue to learn together. We do have a few audience members that might have questions. I will come to you in a second, so if you think of the question you might have, I'm going to do a quick lightning round first. Just 3 to 5 words. Keep it short. You all did fantastically, actually, so congratulations. We're not over time, so you've all done very well sticking to the time. But a quick lightning round. I want to ask you 2 questions. And so the first one, maybe we'll do a round first with the first one, then I'll come back with the second one. But the first one is, what actions, and I mean real concrete activities and actions, do you want to see from exchanges, from stock exchanges and or regulators, you can pick which one, or both, in the coming years to expand? So maybe from now till next COP, what actions do you want to see stock exchanges taking? And I'm going to start at this end and come across.
Provide reliable data, provide training and materials, and for the regulators of the world, we need just one standard for everyone. Thank you.
Great, thanks. Owain?
Oh, I'm right there with you. So, yeah, international standards that are clear and open. Yeah, absolutely.
Alicia?
Obviously, slightly, because I'm the one that would have to work on that standard. One that speaks to each other. So I'm realistic about how hard it is to do a single standard, but I think a standard that does get the right outcomes across multiple jurisdictions. And yes, I agree, data.
So across jurisdictions in a common language, or?
I think with the nuance of what each jurisdiction needs, because jurisdictions do need different things.
Thanks, Alicia.
So you asked what actions do I expect from stock exchanges? Yeah. So, well, regulators, of course, to go ahead and apply and adopt those standards that we have and recommendations that we are issuing, and for exchanges to help get issuers get there in terms of getting the reporting out.
Okay, so helping issuers, Harry.
Hello, yeah. Be cognizant, and this is for regulators, be cognizant that future-looking information is vital, but by nature is going to be a moving target.
Thanks, Harry. Marty?
For regulators? Yep. For regulators, bring the standards in and don't deviate from the global baseline and do it fast. And for the exchanges, obviously sign up to the training and get it locked in.
Just support harmonization again across the different standards. Companies, again, when you talk about a sustainability officer that has X amount of hours in their day, I think we'd all prefer them working on their businesses as opposed to spending time just on pure reporting and compliance functions.
Okay, for stock exchanges and us, I think it's ESG data, and for regulators, taxonomy, common taxonomy standards. And I think if we go that way, alignment is very, very important.
Great, and I think we do have time to take a couple questions from the audience. So I have one here. Maybe I'll just bring you my microphone.
Yeah, I mean, there was an attempt at Rio Plus 20 to set a date by which all of the stock exchanges should have to produce ESG reporting as a requirement and the sustainability report. It went to the last day, and actually the Brazilian São Paulo exchange, as part of the process, did do that. There is now a General Assembly resolution every year that deals with ESG reporting and with credit rating agencies, which UNCTAD act as the kind of secretariat to the resolution. It seems to me that if you want to actually push the needle, there's an opportunity each year to push the needle in New York and get common things through for all countries.
I guess it's a statement, but does anyone want to react to the statement of pushing through regulation? Is there any other questions in the meantime? Yeah, here you go.
Thank you so much. This was an excellent panel. I wanted to ask a bit about anti-ESG sentiment in the world. So I'm from the US, and we at the state level, we're dealing with a lot of just, states trying to push back on this, whether it be at the state level, pension funds, stuff like that. So I just want to pick your brain about how to communicate that within really big international corporations that have to kind of deal with like the EU and the California with CSRD, SB 253, kind of pushing us in one way, but then also having states and other people push us in the other way. Thank you.
Great question on ESG sentiment.
Maybe folks are looking in my direction for that one. Is this microphone working? So a couple things on that. So first off, Conference Board did a study a little while back, interviewed a range of companies, asked those companies if they had seen some level of pushback from anti-ESG forces. About half of those companies said, yes, we've seen some level of pushback inside our companies. 11% of that half said they had actually changed their programs inside their organization. So keep in mind, the vast majority of companies are still going ahead with what they're doing from a sustainability perspective, DE&I, et cetera, but they're being much more careful in how they talk about it. And I think that's something we can all learn from here across this group is, the terms ESG are three completely different and are very different across different companies as to what that means. I think we can all be much more specific about what we mean. After that, though, when I talk to companies and also when I talk to investors, the investment community also has probably over time faced its own questions about greenwashing, and the investors are oftentimes the ones that face most directly into red state or blue state pension funds and the pushback in either direction. I still see those investors, again, following the same precepts that they've had before, still making the same type of investment decisions, but being more specific about what's our methodology for determining what is a company that has addressed its non-financial risks versus one that hasn't. So a lot of this has to do with terminology and how you speak about what we're doing. But the reality is I've not seen a lot of change from how companies or investors have operated their businesses.
Thanks, Brian. Marty, do you want to take the angle of standards from that, how standardization can tackle the language issue?
Sure, and I think when we think about our standards, right, it's about telling the corporate story, one complete, consistent, comparable story about how a company is going to create and sustain value in the short, medium, and long term. And there's nothing you need to call out there if you're thinking about what you're doing. If you are just telling your story in a consistent, comparable way about how you're doing business and how you'll still have jobs in the future and how you are not making sure that you've got your future resources in place. And the standards bring that trust and transparency to that conversation, to that reporting, to that company story, but also help mobilize finance, also help, much, much more broader, provide that consistent information that can be compared with others as well, which often helps with this conversation.
Thanks so much, Marty. Anyone to add on that before we move on? Okay. Oh, we've got a question.
Hi, thanks for an excellent panel. Can you hear me? There we go. So thanks for an excellent panel. So I'm with the World Business Council, Sustainable Development, WBCSD. We love a long acronym. And we work with businesses on their kind of capital markets engagement. So shortcutting, what can you do to help create a business case for sustainable listings? Because we talk about engaging with CSOs. CSOs have no role in the funding strategy, I hope, of any company. And nor would they be doing a lot of the IR that starts dictating where and how they start to list particular types of issuance. And what it does is it creates, and I've got private sector experience, this extra churn. It's an extra use case, it's an extra reporting requirement. So what can you do to help create a business case for sustainable listings that will help get it onto the agenda of treasurers in addition to CFOs and CSOs? Thanks.
Thanks. Anyone jump in for that question? Harry?
I'm assuming when you say sustainable listings, you mean instruments like green bonds. So, okay, right. I don't know whether I heard you correctly, but I do hope that CSOs do have an influence on fundraising of their own entities, and certainly if things are set up right, they should have an influence of having a discussion with their own IR, their own treasury department, right? And hopefully actually with the clients and others in their stakeholder, and that's certainly the case for exchanges as well. Business case is admittedly not an easy one, because we are in this for a marathon. We're looking at 2050 and beyond. The targets are quite a long way out. It is starting to seep into compliance space quite a bit now. And so we do see a level of some fatigue setting in after years of pushing for this. One advice that we would give is, even though some of the goals might be long-term, do try to set some short-term and mid-term goals and targets that is raised at board level as well as the management executive committee level. ISSB actually mandates for disclosure of the role of the, not only the TCFD as well, not only the role of the board, but the link on the performance as well of management too. So as things start to go down this path, linking back to remuneration, disclosure of that, in order to disclose, you actually have to do quite deep internal work. So that's a combination of carrot and stick, I guess. But sometimes maybe that is what's needed for that deep discussion to happen at the management and the supervisory levels.
Thanks so much, Harry. And I think that's really harks back to the role of a stock exchange in not just having sustainable listings that are labeled that way, which of course we do have sustainably labeled listings, but also integrating sustainability throughout the whole company, which Brian was talking about, and really getting it beyond a sustainability officer within the company and a whole of organization movement. Now, I think we have 1 minute left, and I am going to take that one last minute just to remind everyone, we do have a panel this afternoon too, so if you're wanting to hear more from stock exchanges, please join us this afternoon at 2 p.m. You can find it on our website, sseinitiative.org. Before we leave, I want one sentence from everyone on what gives you hope. I like to end on a positive note if we can. You've spent some time at COP, you've been around your peers again after some time, so let us know what gives you hope, just to close out. And maybe I'll just start with right next to me.
Well, it's just that, remember, 2 years ago, we didn't even have an ISSP. And now we're talking about those standards, and we've endorsed them. And, sorry, one more thing. I didn't hear the term alphabet soup come up even once. And that's what we used to talk about.
Alicia?
I might give a slightly cheesy one, which is actually the level of interest young people have in coming to work on these topics is immense. I have never in my career seen this many applications come in anytime I put up a job ad. This is where I think a lot of people see their values and their future really connect, and that gives me a lot of hope, because I actually think that's the future of how we get this right.
Great, next generation. Owain?
I totally agree with that. I would say also, from my perspective, the fastest growing part of our portfolio right now is the environmental side. So the investor, the trading interest is there, which gives me a lot of optimism.
Thanks, Bandar.
Yeah, two things. First, everyone wants to collaborate, and that's fantastic. It's not a competitive advantage. Everybody wants to share their experience. I really love it. But also in the region specifically, I see more and more of the younger population are taking sustainability and climate action very seriously, and they want to tackle it, head on, and that's really hopeful.
That's wonderful. Maybe let's not leave it all to them, though. We have to keep working too. Harry?
Yeah, I think we're seeing here at COP already a lot of practical collaboration or collaborative practicalism, and that's what's going to shape what we're going to do in the coming years.
Don't think I can beat collaborative practicalism. I think that's probably my new favorite word ever. I was going to say, yeah, I think it is. But I think that covered with this community. This community has never been so strong, so positive, so diverse, and all moving in the same direction at the same time, which is why we can do things in 2 and 3 years nowadays rather than 6, 8, and 10. So I think really the community and this practicalism thing.
Francesco, to your point, board members understanding, getting involved in this process, and understanding how value creation comes from sustainability practices. I attended a session last night of entirely of board directors who all spoke about how they see this and how they're bringing this to not just the first boards that sustainability officers brought to them, but to other boards that they're able to bring that onto as well. That's going to move quickly.
Thanks, Brian. Last word to Francesco.
Thank you. Well, maybe we should put younger people on board so that, we accelerate. But I would say the private-public philanthropy partnership, the collaborative space has really accelerated during the last few days. I think that's great to see. I think the incredible technologies that are developed to reduce carbon footprints in every sector of the economy, and they're all showcased around the green and the blue zone, it's fantastic. And then the ambition of the next generations. I mean, they certainly see this as their priority, and I think if we cannot do it for them, they're going to do it themselves.
Great. It's a tall call of order to all the young people, but let's be there with them. And thanks, everyone. A round of applause to our speakers. Thanks, everyone.
right, welcome everyone. Thank you so much for coming to what I think is going to be just an amazing star-studded panel. We're here to talk about the role of trade policy in decarbonizing shipping and logistics. This is trade policy is something that I've covered for a long time. I'm a reporter at the New York Times in Washington, and my name is Jim Tankersley, and it's a thing that, to be honest, for a lot of my career was difficult to convey to editors and even some readers of why it was so important to write about trade policy. And then the pandemic happened, and then suddenly everyone wanted to be an expert in trade policy. And I remember that last year I was flying back around this time from the G20 summit, which I had been covering following President Biden. And on the way back in, on a flight into JFK Airport in New York, I just saw lines and lines of container ships just stacked up, waiting to unload. And I remember thinking, this is why people are suddenly caring, because the inflation, the supply chain and disruptions, all of it, and the emissions from those ships sitting out there are all things that are now suddenly at the forefront of our audience's mind, and I know of your minds. So I'm really delighted to have this group of people to talk about sort of how we can decarbonize that industry, which is so important for the global economy, and how trade policy can help. So I don't know that I need to introduce everyone on this stage, but I will very briefly. Dr. Ngozi is the Director General of the WTO. Mr. Sultan Ahmed bin Suleiman is the CEO of DP World. Ms. Johanna Christensen is the Global Maritime Forum CEO. Bruce Douglas is the CEO of the Global Renewable Alliance. And Rabab Ulus is the CIO of Maersk. So thank you all for being here. I wanted to speed through that so that we can just have a discussion. I hope we can all talk to each other about these topics, and then we'll take some questions from the audience toward the end. I'm going to start with Dr. Ngozi because it's an exciting day, first day ever of a trade day at COP, and a big sort of moment for you all of releasing the 10 trade policy tools for climate action. And I was hoping you could just tell us about those tools and why they're so important right now.
Well, thank you very much, James. And I do want to thank my co-panelists for taking the time this morning when there's so much going on. But yes, it is an exciting day. And I'll begin by saying, why is it so exciting for us? When I first started this job as WTO DG, trade was not part of the conversation as such. At COP26, and I said, why not? Trade is a solid part of the solution to the problems, but it was being seen more as a problem rather than a solution. And so we just had to turn that narrative around. I'm not saying, obviously, we're going to talk about issues of the emissions from the logistics of trade. That's why we're all here. But beyond that, we felt that we had to change the narrative on other ways that trade is central and crucial to getting to net zero by 2050. And to fulfill that promise, last year at COP27, we delivered a Trade and Climate World Trade Report. We made it, and this year we said for COP28, we are going to talk about 10 specific ways in which trade and trade policy can help get countries to net zero. So I'm very excited about it. Not to take too much time, but maybe mention one or two things from there. And maybe one will speak exactly to the CEOs who are here. You know, our trade facilitation policy is designed to cut down bureaucracy and customs procedures at the border, to stop trucks from idling, as His Excellency Sultan said, at ports, at borders for 2 or 3 days, ships idling and, emitting. If we digitize and we implement this trade facilitation, we really can save on time. And so that's why implementing the WTO's trade facilitation agreement is very helpful to cutting down on carbon emissions. We've even monitored at some borders where countries have implemented this, they've been able to cut down on time by 80%, 85% or more. And we know that this cuts down on emissions. So this is not rocket science. This is something very crucial. Let me mention another one, government procurement. We have a government procurement agreement at the WTO that is designed to make efficient and transparent government procurement a centerpiece. But we also see that it can help we can green procurement and green economies. If you have $13 trillion in government procurement, which is responsible directly and indirectly for 15% of greenhouse gas emissions, why can't we have green tenders? So we're getting our members to think you've got a powerful instrument in your hands. Please procure green. And then a final one. There are 10, but I'm mentioning 3. One of my favorite is this. When I was in cabinet as a finance minister, you know, I purchased a hybrid in Nigeria. I had a hybrid car. And then, of course, I had fossil fuel consuming cars. And just looking, I said, oh, the tariff on this car is rather high. And when I looked at it, I found we had tariffs that were lower on fossil fuel vehicles than on clean energy vehicles. And I said, this is anomalous. If we want to incentivize clean, green, why are import tariffs on those higher than for fossil fuel? And we were importing a lot of second-hand cars, which were even more polluted. One of the things we are saying here is many countries don't pay attention to that. Look at your import tariff regimes and make sure they are aligned with the objectives of net zero by 2050. So those are just 3 exciting examples, at least a very common sense that I want to give. Thank you.
I promise this is true. Those were the 3 I would have picked if I was going to ask you. So thank you. I'm particularly interested in procurement and in tariffs. So you're speaking to the policy wonks here. Mr. Chairman, you also have a decarbonization strategy that DP World has recently announced. Can you walk us through that and talk about what efforts you're making?
Well, thank you very much. I'm very honored to be with you today. You hear all the time that talk about the trade, and the trade brought over 1 billion people out of poverty. But also trade, 80% of it goes by sea. So that is also a problem. But the problem for the shipping line is really twofold. One of them is that the alternative energies, even if they are available, which they are not, very difficult to find. And the ports don't have facilities, even if they have them, to store them. So these are 2 issues which are facing the shipping line to confirm with the IMO regulation. We in DP World, one of our sister companies is Dubai Dry Docks, and we try to do something which is helping a little bit. They are producing scrubbers which are installed in vessels to extract the CO2. And it used to take, I think, 70 days in China. There was a shortage of a producer. And now we produce it in 30 days. And we provide it to our customer. So that's one thing we did. As far as the port, electrification, we've done it in our port, in many parts of the region, including Jebel Ali, where all our buildings are today basically using solar energy. In other countries, it's very interesting, like in Berbera in Somaliland, they have a solar plant, but it's not connected to the grid. They don't have the funding. So we actually funded them to connect it, which was easy. We use the power and they use the power. In Egypt also, we electrified our system. So we do our part. But I'll go again that there are many parts not in our hand. We spoke about the vehicles and processes and all that. We have a system that we produce in DP World, a custom clear system that is so good and efficient. And we're providing it to countries because we cannot operate fast if the customs are delaying people. And I tell you, the delays is not only in places like Africa. If you take, for example, as consignment from Frankfurt to Chicago, you will ship it by air because you want it to reach fast. But then to clear it out will take 48 hours from Chicago after time it reached. So there are so many regulations that need to be done. We have a system in the custom which is called pre-clearance. So before the shipment arrives, we request all the documentation that is needed. So we go through all the authorities to get the clearance from others who are not under us. By the time it comes, it's cleared. These kind of policies are very important.
Thank you very much. Johanna, I want to pivot to you. I know that you at the forum are hosting the Getting to Zero Coalition, and you're developing these green deep sea corridors. And I'm really curious, what are they? And how are you getting help from outside industry and governments to make them happen?
Yeah. Is this even on? Yeah. Okay, good. Thank you. A little hard to tell from here. Apologies for that. Well, first of all, thank you for your question. Yes, indeed. So Global Maritime Forum has founded the Getting to Zero Coalition, which is this alliance of 200 plus stakeholders from across the shipping and logistics maritime value chain, if you will. And together they've been, over some years now, developing this concept of green shipping corridors. And the idea with green shipping corridors is really to try to simplify an incredibly complex challenge, which is get all of international shipping to coordinate its transition to a whole new set of fuels that don't really exist in any material way yet. So the way it's a way of simplification. So it's identifying specific trade lanes where favorable conditions exist for stakeholders to work together to put zero-emission ships on the water. And there are lots and lots of examples of this underway now. So we recently published a progress report that looks at, that effectively tries to assess the landscape of what does that look like, how many are there already away. And there are about 44 green corridor projects underway. And they're really diverse. It's everything from liner shipping, so container shipping between the ports of Rotterdam and Singapore, or the ports of LA and Shanghai, to shipping iron ore from Australia to Asia. And what's particular about why we think this is a useful tool in accelerating shipping's decarbonization is because it's a way of testing completely new technologies and solutions at scale, so demonstrating that they work. And it's a way of pooling demand as well onto specific solutions. There's an enormous cost gap between the fuels that shipping uses today and the fuels it's going to be using in the future. And this is a way of kind of bringing all the pieces together that allows this to become a viable commercial future solution that can be scaled up across the sector.
It's an incredible challenge to try to steer people toward technologies that are largely not there yet. But there are some that are starting to be there. I know that my colleague Anna Swanson in Washington for the Times recently went to Copenhagen to view the Laura Maersk as it was being launched onto the sea. And I'm really curious, Rabab, can you tell us sort of how you all settled on green methanol as the sort of the way that you are going to be approaching green shipping?
Yeah, thank you very much for the question. And I think for us, it all started with some really hard commitments that we made in 2019. So we set a commitment to be net zero by 2040. And when we set that commitment, actually there was no green fuel, there was no technology also, and there was no demand. So basically we did not have anything except a very hard commitment. And, 3-4 years down the line, November 23, actually, Laura Maersk was the first or the world's first ship to sail on green methanol. So that's our journey so far. But I also want to emphasize that it did not end here, because we also ordered another 24 vessels. And the better thing is that we saw our competitors also taking a similar path. So my point here is that someone has to start, and then also things start to move from there. And now there's more than 180 vessels in the order book that are dual fuel and can sail on green methanol. The considerations that we had for green methanol were a couple of things. One, the availability. It was a fuel that is already there. Yes, not there in scale yet, but it was also there. And the other one is that it significantly reduces greenhouse gas emission. And it was really important for us in that journey to have something that can make a significant difference. Then I think the other key proof point for us also now is that we actually signed some large agreements just also last month for 500,000 metric tons of green methanol that we will have availability for from 2026. the world will need about 21 million tons to decarbonize shipping, so still we have a long way to go. But I would say that with 500,000 tons already that's going to be available for us in 26, it is really, really promising. Having said that, I would still say that there is still a lot of challenges on this journey. The first one, as I mentioned, is the 21 million that we need to bridge to. But the other key challenge is this thing about we need to advocate for a green balance fee, which is basically the price of the green fuel. So we need to find a solution to make sure that the price of the green fuel is in parity with the price of the fossil fuel. And that's where the green balance fee comes into the picture. Because the aim here is that to distribute the additional cost of the green fuel to the fossil fuels, basically, and bring that parity until the demand picks up. So these are some of the, let's say, opportunities, but also some of the challenges that we need to solve for.
Thank you so much. And Bruce, we'll sort of end the first round of questions by asking you to kind of pull back the camera here for us a little bit. You've watched the shipping industry over the last couple of years, sort of, and how they are interfacing with renewables. And I'm just curious, can you tell us, how they've responded? What sort of ways that they have helped to shape priorities in the renewable space?
Yeah, thanks, Jim, and thank you, Dr. Ngozi, for the invitation to be here today. It's such a pleasure to be here. Maybe I'm the odd man out here, not being an expert, and I have to come clean, not being an expert in trade policy or in shipping. But I understand why we've been invited, and I really look forward to learning more. In fact, yesterday we had a long and extremely positive meeting with Dr. Ngozi and her team at the WTO about trade. So I'd like to talk about two things today. One is the need for a massive scale-up of renewable energy supply. I think it comes clear from the discussion from the other panelists. And by the way, congratulations for your leadership. You both mentioned first movers, and I think that's the key piece here. Those first movers then enable the rest to follow. And so, you should be extremely proud of what you're achieving for the rest of the sector. On the renewables piece, you may have seen yesterday there was a launch of a pledge to triple renewable energy globally by 2030. It's now being supported by 118 countries globally. I think by lunchtime it may even be 119 if New Zealand come on board. That sends a great signal. We used to talk about ambition, action, and accountability. The ambition is now there. So the pledge from those countries really does send a signal to us to take action. And that's the next step. And that's where the trade policy piece comes in. So from our side, we have four main enablers that will allow us to scale renewables. So firstly is the financing of renewables. The second is on permitting to get it built. So it currently takes longer to permit a wind farm in many places than it does to build it, which in the current climate crisis, it seems a little bit ridiculous. The third is grids to get it connected. And the fourth is value chains. And on the value chains piece, so the supply chains for us, building manufacturing and transporting that to the place it's needed is exactly the discussion of today and what we touched upon yesterday, Dr. Ngozi. We are coming out with a report later today from the wind industry, and it was modeled by the Boston Consulting Group, and it has four main scenarios. Three of those scenarios indicate that wind turbine prices will go up. The only one that indicates that they will stay the same or even go down is the one with open borders and an open door policy to trade. And that's the discussion we had about how we can maintain that and even increase that across the world. You mentioned import tariffs. We've had extremely bad experiences with import tariffs in the renewable industry. I'll just point to one example, which was in Europe, probably almost like 10 years ago now, where the European Commission imposed import tariffs on solar panels from China initially, and then spread to other Southeast Asian markets. That not only had a detrimental effect on the cost of those panels, but of course that had a knock-on effect on the decreased deployment of renewables. So in an era when we want to see the huge scale-up of renewables globally, the last thing we need to see is protectionism on renewable supply. So I'll stop there, but what I'd like to, get from today's discussion is, from the experts and the leaders in the space is what we can do from a renewables point of view to support you, both in the supply. We understand the huge offtake demand for green fuels, ammonia, green methanol, and green hydrogen. We now have the capability to do that. So we have the technology. It's cost competitive with fossil fuels in almost all markets around the world. And we also have the policies and finance in place. So please look to us for your supply going forward. And also, please do give us your input as to what we can do to help you. Thanks, Jim.
Yep. Yes, please, no. Yes.
So can I jump in and just say one thing? You mentioned issues with permitting, regulations, getting in the way. And I wanted to say that apart from our trade facilitation agreement I spoke about, WTO members, 119 of them, are now negotiating an investment facilitation agreement. We hope to have it ready by the end of August. Of course, it will have to be ratified. But the whole idea is that we should also try to sweep away the bureaucracy that confronts investors when they come in, including things like land. I keep hearing investors talk about, land, even getting land to build, and the permits and so on takes so much time. So you can count on us for that as well.
I actually would like to sort of open a question to everyone before we move to the sort of next round. But it really strikes me, as an economics reporter, we think in supply and demand and pricing. And people have, on the panel, each identified problems with each of those in this space. And I'm just curious whether it's getting the storage capacity that ports need for alternative fuels, or whether it's getting the pricing right on fossils versus green fuels. What are things that you all think government policy, global trade policy could be doing differently to influence supply, demand, and pricing in a positive way here?
Thank you. Thanks for the question, and I think it's quite relevant for this group and for all of us here. I think one of the key things where we will need support on is this thing about harmonizing the regulations. So when you look at shipping, it's a global trade. So having some kind of harmonized regulations and certifications, that would definitely help with that journey. The other thing is what I mentioned earlier about this thing about implementing this green fee balance. This is really, really important. And that's why we are advocating for it. And we had our CEO together with the other top CEOs of the shipping industry advocating for this, because it's really important for a price parity perspective. And the last one from my perspective is this thing about support for scaling the production of green fuel. So when it comes to infrastructure, actually there are places that really have a lot of potential, especially if you look at places like Morocco, like Egypt. I mean, they have the wind, they have the power, they have basically what it takes, but they need the infrastructure and the investments to be able to help us with some of these problems. So I think focusing the infrastructures in places where we have the wind and the power, that is really, really important.
You made all my points for me already. Well, this is it. So the primary input cost in terms of the green fuels of the future for shipping, it's renewable energy, right? So and so where there is cheap, abundant renewable energy is where these fuels can get produced. So can we focus our efforts on scaling up production in those locations? I think they'll be incredibly helpful. And you mentioned already Morocco and Egypt. I think here in the wider Middle East, I think is a huge potential. Chile and other countries in Latin America have an enormous potential. And likewise, Australia, for example, I mentioned shipping iron ore from Australia to Asia before as a green shipping corridor. That's their favorable condition, is that they have very, very cheap renewable energy, or rather the potential for cheap renewable energy, because of course permitting and other elements get in the way of actually rolling out or getting the build out done on the time scale that we need it. So, yeah.
Just to respond to that, I mean, it sounds like a match made in heaven here, that But I have to say, the challenge we have as the renewables industry is that where the potential, the huge potential for low-cost renewables exist, tends to be the places where there is not the huge load, the offtake for that. And I think this is the opportunity we see, is we can place significant amounts of renewables in the Middle East, in the MENA region, in Africa generally, but also, as you say, in Latin America and Australia, where there is enormous amounts of space. So the permitting and the acceptance of the renewable projects is easier. And place there the immediate production of green hydrogen and the other green fuels that are required, and then export, transport those to where they're needed. So that's the most effective way we see of doing it at extremely low cost. And so that's what we're now seeing being rolled out. Sorry, Chairman.
Wait, I'll wait.
Alternative fuel, even when it's available, it costs almost 5 times the diesel or the fuel oil. It's unfair if Maersk, for example, using alternative fuel, which costs them 5 times, and other people are using something else. So they should, in my opinion, government, maybe a tax, a carbon emission tax on the fuel. So it makes it at least, when the cost is the same for everybody, nobody has an issue. But when somebody has a high cost because of the passion for green, and the others are using fuel which is cheaper, it doesn't work. So there have to be a regulation. Once it's available and facility there should be a tax to make sure that the cost of everyone is the same, in my opinion.
Well, maybe I can comment on some of this. Yeah, marriage made in heaven is emerging with government policy. No, but first on harmonization and of regulations and certifications. I just want to say that for the steel industry, they came to us at the WTO, interesting enough, saying, look, we've got all these decarbonization standards. They counted 20 or 23, and they said, look, we can't cope. People are coming up with different standards. Can you help us to make sense of this? And so we started to work on it. Actually, Jean-Marie Paugam, my Deputy Director General, is here, and he took it on. And we brought the steel industry in, and we've been working with them on approaches to harmonize. And here we launch principles, along with that industry and other stakeholders, for harmonization of these standards. So this is, we are going to see how that works, because this will be an example for one industry. And if it succeeds, then we can move it to other industries. So we can look at shipping and others. So we are starting with that. So there's hope. The second, and of course, all of you use steel in your shipbuilding and all that. So if we get it right for them, I think that could work. On the cost of green fuel, we're hoping that what happened to solar panels and so on, they've become so competitive now, but that was due to trade and supply chains that permitted the cost of this to fall. And that's why putting restrictions, import restrictions and so on, we have to watch what happens with that so we can remain competitive. But similarly, we also need to make sure that there are some subsidies going into the production of these products. And there's nothing wrong with subsidies if they are done right. If they are not done in a way to undermine competition from others, but actually are put into research and innovation so that you can have cheaper new technology. So we support that, but subsidies direct to production that undercut others, of course, will not be so happy with that at the WTO. But I want to come back to what His Excellency Sultan said, which is it will take time for some of these technologies to for the cost to go down on the alternative fuels. The issue is not even put a tax. The issue is that we're still subsidizing fossil fuels to the tune of $1.2 trillion. And a lot of that subsidy is in developed countries because they are the ones that have the fiscal space and the money to do this. So if we can at least remove the subsidies, that would make it easier for these alternative fuels to compete. And we can use that money, channel it into the climate finance that we're all looking for. This is one of the things we advocate in this tool, that let us remove 1.2 trillion in direct fossil fuel subsidies, as measured by the IMF, $630 billion in trade distorting subsidies to agriculture. We at the WTO have worked hard to get an agreement to remove $22 billion in subsidies in fisheries that lead to illegal fishing. Why are we in the world subsidizing the wrong things? I don't get it. I don't get it. 1.7 trillion, and here we are, when they put $100 million in loss and damage, we're all delirious with happiness. When we've got 1.7 trillion that we're throwing away on the wrong things that are environmentally damaging. So let's get rid of that. Sorry to be so passionate.
Do not apologize for passion on a panel ever, and this has been great. In fact, I'm gonna try this one more time because that was such a great set of answers. And I would just very quickly like to note that if anybody here is following the deployment of renewables right now in the United States, it's pretty wild to me that I flew halfway around the world just to hear more people talk to me about permitting reform. It's the #1 thing that people, it's the biggest thing holding back America's clean energy transition right now is permitting. But I am curious about a much broader question for all of you about trade, because it is such an integral part of our lives. As you were mentioning, it has lifted so many people out of poverty, and yet there is some sentiment, and it has had this great ability to drive down costs of new technologies. But there is some sentiment that the sheer act of trade is a big part of the problem, that we're shipping so many things around the world. And I'm just curious, do you think that the current levels of trade, or even more, can be sustained? Will the technology of decarbonization catch up in time to allow this to be sort of sustainable, to have this level of trade and to hit the world's emission goals? Please.
During the pandemic, we have seen how fragile the supply chain, that China shut down and the whole world shut down, and we suddenly have shortage. I never seen that you want a car and you have to wait 3 years. It's happening. And so I think that taught people something that we've been talking about it maybe in 2014 when they talk about nearshoring. So the idea now is that many manufacturers who are in the Far East have decided to move their production facilities where the consumers are. And this is happening now. Like Apple moved their iPhone from China to India. Many others are going to do the same. So nearshoring is going to be a solution, because then you don't have to ship something that you need from one part of the world to another. That is one thing that is happening and helping trade, in my opinion.
Are there others who would like to? Please, Roland.
Yeah, so the way we think about it in Maersk is that, I mean, global trade has been here for many years. It will continue to be here. Of course, nearshoring is part of the solution, but we will still be dependent on China, and that will still happen in the future. So I think the key thing is that how do we accelerate the transition so that we're able to cope with what is basically the global trade. And here, I also think that it's not just about one green fuel solution. So I talked about methanol because it's the available solution for now. But we are also looking into other solutions like ammonia and others. And I think we need more also money put into research and development so that we can accelerate that the energy transition and the decarbonization to cope with the growth of the global trade.
So on that, there's huge benefits to localization or showing, especially in our renewables industry, and we've seen that now. Several success stories I can point to: India and Brazil as two examples, where they have now developed a local manufacturing industry for their own deployment of renewables, but also starting to export. And we had a great meeting with President Ruto from Kenya yesterday and his team, who was advocating for not stopping, but decreasing the import of products from other countries and start producing and exporting product from Kenya. And he referred directly to the production of green hydrogen and ammonia, green steel, and so on. And I think that's the message we're trying to get across, is that there are benefits now to localization of manufacturing renewables, security, so diversity and strength and resilience for those supply chains. There's also significant socioeconomic benefits to doing that, job creation and so on. Currently, we have a situation that in the solar panel manufacturing, approximately 80 to 90% of the solar panels are manufactured in China, and that's probably set to continue for some time. And in the wind turbines, it's about 55, 60% manufactured in China. And what we'd like to see is some diversification. We see that now taking place in the US, Jim, your home country, but also in many other areas such as Brazil and India. On the permitting, if you've got a headache, Jim, ours is much bigger on permitting. As the Global Renewables Alliance, we just launched a permitting paper. It's a 9-point plan to try and accelerate permitting. And permitting is one of those sort of low cost or even no cost, no regrets piece that governments can implement to accelerate renewables. There's something like 2,000 gigawatts of renewable capacity stuck in permitting. And so we advocate for standardization. There was some comment about harmonizing. We have significant problems where if you're a developer of renewables, even in a jurisdiction like Europe, you have different permitting regulations in each country. And in each country, you can have up to 8 or 9 different authorities that you have to get permits from. One example is a one-stop shop in Denmark, where they have one place to go to permit offshore wind. Another way of standardizing the permitting regulation that you need to go through. And the third is digitizing. So if you digitize those permitting procedures, it not only speeds it up, but you can actually do more of the permits in parallel at the same time. So some solutions we see, and we believe the solutions are there, but they need rolling out. Thank you.
Yeah, I actually want to build on something you mentioned earlier, which is around this idea of green fuels, whether they be methanol or ammonia or whatnot. So the hydrogen-based fuels being produced in countries that have the most favorable conditions and being exported where they're needed, or in fact some of the production being then relocalized there. So I think we can expect that there will be some reordering of global trade rather than necessarily a decrease, is a way to think about it. And I can think of at least one person in the audience who is in that space. I'm going to embarrass him a little bit now. Paolo, who's down there in the back row, who's in that space, right? Who's thinking about invested in vessels that are going to be shipping green hydrogen around the world, right? So there is already an emerging supply chain. It's quite small still. I think there's some of the first ones that are doing it, but it's something that's going to be emerging, and so I hope we're going to see lots more of that, because that is what will allow shipping's emissions to decrease while trade is still increasing.
Can I add, and then it would be lovely to hear from the person in the space, if you don't mind. But I just want to say that we are actively promoting this idea of, your green comparative advantage of countries. We have our chief economist here, Ralph Oster, who has come up with this idea. So countries produce what they are relatively good at. That's the economics, and you're efficient at. Now we have producing what you're relatively green at. And I think it's a beautiful idea, and that will bring in countries that are not normally mentioned. That is why African presidents, like President Ruto, who were with him in another session, and many other countries, see Morocco, Egypt, were mentioned. They are promoting because they know they have a comparative green advantage in wind and solar. And yet, people don't normally mention them when they say, well, we want to produce something, because they are thinking of China +1. And I'm going to keep singing this song. I told everyone I'm tired of hearing about China +1, because +1 is Indonesia or India or Vietnam. And I'm saying, what about Egypt? What about Morocco? What about Kenya? What about Nigeria? What about Rwanda? Whatever, Bangladesh, Chile was mentioned, Brazil. let us think about diversification in a much broader framework, because some of these countries have a green comparative advantage. And then you make it there, and some of them also have critical minerals that are being sought after. So apart from shipping it, why do you want to go and take the critical minerals, export them somewhere else, which is what is being done, far away to go and be processed, when you can use clean energy and process them right there? Only up to 2/3 of the minerals on the continent of Africa have not even been discovered. And if you look at what has been discovered, it's full of all these minerals you need to go green. So, but I never hear people mentioning African countries when they are thinking. And I've told the presidents as well, the investment will not fall on your lap. This permitting issue, making things easier, and, removing this perception of risk is also going to help. So I'll stop there.
No, this is great. And I'm going to stop asking questions now, too, and I'm going to turn it over to the audience. So if we have some questions, we can start there.
Thank you very much. Gavin Horrod from the International Windship Association. I'd just like to bring in a little bit of a counterbalance to what we're talking about here. The focus is very much on a fuel-centric approach to decarbonisation. We're bringing in a technology that it delivers wind directly to the ships, sails, etc., which is growing quite quickly. However, what I'm concerned about is exactly what Mrs. Ngozi was talking about around subsidies. So the 1.2 trillion in direct, 7 trillion in direct and indirect subsidies for fossil fuels, but we're repeating that with alternative fuels and excluding direct use energy from that mix. So what I'd like to hear from the panel is, how do we integrate total cost of ownership into the trade policies and the decarbonisation policies of both shipping and logistics? Thank you.
Take that first. Total cost of ownership. How do we?
Can you explain that concept? Of course, we have all the shipping lines here, so I'm not going to be the one, but I'm not sure I grasped what you mean by that.
I just wanted to. Can I just, sorry, it's difficult to see you and hear you, so can I just ask you maybe in 30 seconds just to put the last part of the question, is that okay?
Yeah, sure. Probably my voice is loud enough. So how do we incorporate the total cost of ownership of the pathways that we're choosing? So at the moment, what you're talking about is a fuel pathway for shipping. We're talking about a non-commoditized wind propulsion pathway for shipping. That is excluded from subsidies because we don't have any cost for the energy. So the total cost of ownership of all the systems, the logistics, the mining, refining, transporting, bunkering, etc., and all of the non-GHG impacts, climate impacts from fuels, how do we incorporate those into the measures, into the policy framework? Thank you.
Okay, I'm not sure I'm the right person to answer that question, but but let me try. Maybe I'll try to simplify that. For us, for example, in Maersk, basically we buy green methanol or green fuel, and we believe that when we buy that green fuel, that all this total cost is basically incorporated into the cost, and that's why it's quite expensive at the moment. It's more than double the fossil fuel. So as I said, I'm not sure I'm the right person to answer, but at least that's my perspective on it.
I mean, I think building on your point is that the less of the whatever green fuel you're going to be using you need, the better it is. And I think that makes the case ultimately for the use of other technologies, not only wind propulsion, but there are many other technologies that can be used to reduce the overall fuel consumption on board the vessels. So I think that already, I will also say there is already a pretty good commercial case, and one that will only become better over time as policies at the International Maritime Organization come in line with the targets that have been set. So that would probably be my view.
Should we take another one? Yeah. Other questions? How about right there?
Thank you. I'm Jan Briand, so I'm a researcher at the Institute for Sustainable Development and International Relations. And I wanted to react, mostly to the second part of the panel, and thank you for this, I think, important question, because we talked a lot when we are discussing decarbonizing shipping about technologies, fuels or wind, or technologies to move the ships, let's say, but we are not talking enough about the demand for international transport, maritime transport. Currently, and just some numbers that we had, the IMO is only discussing about fuels, mostly. And if we look at the strategy that has been adopted this year, they are talking about more than 20 exajoules, so just the quantity of energy of ammonia, for example, if I'm just talking about ammonia. To produce it, you need half of the world electricity production, in addition to what exists today. So just to say that we cannot continue with the same demand growth of transport maritime, because it will be a main problem, and we need to address this question. So I wanted to ask maybe to WTO how they can interact also with the IMO on this question of the strategy for reducing shipping emissions, because it's not only about technology, but it's also about demand and what we will transport in the future, and potentially discussing all the other goods and seeing what are the trade policies that could be put in place to nearshore. I think someone mentioned these words, this question of the reconfiguration of supply chains, that the IMO for now is not including in his vision and strategy for the reduction of emissions of the sector. So I think this is a big, big question that is not tackled yet. So would be happy to hear.
Thank you. It's a very good question, and His Excellency Sultan mentioned this issue of shipping, moving most of the goods around the world. Yes, I think the patterns are going to change from what we've seen. But the IMO, yes, there has been this complaint that international organizations are not taking an integrated approach to dealing with these issues. So you may have the IMO doing its thing with shipping taxes, you have IMF, you have WTO. We are all working differently on some of the same issues. And the good news I have to tell you is that we've agreed to pursue a more integrated approach in which we all work together. And so we have a new task force to work on a specific aspect of the issue, which is carbon pricing, because we all believe on taxation, that we have too many multiple fragmented approaches in the world, and this is very difficult for business, just like the permitting and regulation. And IMO will be part of this. So from there, we are going to be able to collaborate with each other on all these other types of issues. We've already reached out to the IMO, actually, from the WTO, and we'll continue to do that, because what you're saying is true. We need a more considered approach, that we need to work together better.
I think we have time for maybe one more. Is there anyone else who has a question?
Yeah, Ralph wanted.
We'll take two, yes.
Okay, I'll be very quick, because to be honest, it's not a question, it's more a comment. And the comment is that, we talk a lot here about, trade being part of the problem because it leads to transport emissions, and I think that's important. But we also have to understand that transport emissions are only a small share of overall emissions, and that there's large variation in production emissions across countries. So to the extent that trade helps you source from a greener origin, is actually part of the solution. And that connects to, I think, the important question you were asking, Jim. Are the current volumes of trade sustainable? And what I can say is that the WTO, we are currently working on a study, it's not published yet, but where we simulate what a sustainable pattern of international trade would look like, simply by looking at, imagine a world in which there was a worldwide carbon tax, and ask, what trade patterns would look like. And what we see is there's a change in trade patterns, but there's not a change in trade volumes. So the trade to GDP ratio would actually be quite similar. And this is precisely because of this environmental comparative advantage the Director General was talking about.
Thank you so much.
Thank you so much, and thank you to the Director General and everyone on the panel. This has been an excellent discussion on something that I think is going to change the energy mix of the future. So one thing that I wanted to ask was about I guess it might be more related to you, DG. In the discussions of transitioning the industry, and there was discussions on the IMO strategy about decarbonizing shipping and the new global fuel mix for the maritime industry, what policies or trade policies at the WTO do you think would be most relevant to supporting that, given that the strategy says we need to decarbonize by close to or near 2050?
Yeah, thank you very much. I think that there are several types of trade policies and, WTO agreements that can be supportive to the industry in decarbonization. And I think before you came in, I mentioned one of them because His Excellency, the CEO of DP World, had actually referred to it in an earlier panel, saying that, ships are idling for days and upping emissions because the customs procedures are not fast enough. And so DP World has brought this digitization kit, which it is willing to share and has been sharing with other countries, which I think is brilliant because it's totally complementary to what we're trying to do through our trade facilitation agreement. So if we can make trade procedures faster, that will also mean that ships are not idling there, trucks are not spending time at borders. And I can tell you, the trade facilitation agreement now is 77% implementation. So we still have a good 30% or slightly less to go. So why don't we get that done? And among poorer countries, it's 43%. So you can see the drop. So if we try to do that and we adopt these digitization approaches, that is very complementary. As I said, one of the things, again, from the trade policy side, we are looking at these subsidies. And you know that at the WTO, lovely to see you again. You were one of us. She was one of the ambassadors at the WTO. There's a group on what do we call it? The Structured Discussions on Trade and Environment, led from our Director of Environment here, Hulin, where members are actually discussing fossil fuel subsidies and saying what can we do to help do away with these subsidies. Now, if we can look at that, as I was proposing, this will give a chance to alternative fuels to come up and breathe. And that's why I'm so frustrated, because while we say we want to decarbonize and yet you're still subsidizing the wrong things. So I could go on and on. There are several things we are doing that I think will be complementary and helpful to the shipping industry in order for us to decarbonize.
I want to just give everyone else on the panel a chance to just offer any reflections on what we've all heard and discussed here. It's been such a great panel, but I want to give you a chance to sort of wrap up and make any last points you'd like to make. You want to start, Bob?
Yeah, thank you. I'm happy to start, and thanks again for a very interactive session. I think what I would like to leave this forum with is that no one can do this alone. So this really requires strong collaboration between government regulations, between shipping lines, between logistics providers, between customers, between partners. It really requires everyone to collaborate together and to make things move. And my last point would be, it requires placing some big bets. We have done our part. We will continue to do our part in Maersk, but it requires also that we see similar movements across the industry. Thank you.
Maybe building on what you just said, it requires making some big bets. That's very true. Let's make sure that those big bets are not only made where it's the easiest, where we only have the best conditions, but that we also look at other parameters. How can those big bets also serve other economic and green development goals, such as you were suggesting earlier with regards to the development of renewable energies in a variety of countries around the world that could stand to benefit from that tremendously. And shipping would benefit from that as well. So really thinking about it in those terms, and especially supporting the first movers, I think is something that will be necessary.
Thank you, Jonah. And so I've learned a lot, and we've found new partners. So supply and demand, and of course trade working together, I think we can go some way to solving the issues. I also learnt produce what you are green at and not what you are good at. I love that, Dr. Ngozi, I really do. Did you come up with that? Fantastic, I love it. On the energy efficiency piece, it's critical for us as well to note that the tripling of renewables has to be combined with the doubling of the energy efficiency rates across the world. Because if not, the increasing electrification means there's increasing demand for fossil fuels. So the only way to phase out fossil fuels is to combine the increasing renewables with the increased rates of energy efficiency. And by doing so, our penetration levels of renewables would go from 28% today to something like 68% at the end of this decade. Just in 7 years, we would triple the penetration of renewables. And that, by default, pushes out fossil fuels from demand. Two things as well that were music to my ears very quickly. Carbon tax, thank you for raising that. And the final piece, I couldn't do a panel without mentioning fossil fuel subsidies. Dr. Ngozi, thank you for raising that. In the current circumstances, with the climate crisis as it is, we would advocate for those $1.2 trillion per year financial flow to fossil fuels to be redressed to, we would say, renewables, research, innovation in a space that needs to develop. We need a level playing field going forward, and so please, that's what we call for. Thank you so much.
I'm fine. Thank you very much. I just want to mention one thing, that there is a misconception that going into green is costly. Not everywhere. In a port, I give you two examples. It used to cost us 10 million dirhams to pay the bill of electricity for the lights that we have many yards to light. We changed them to LED. It cost us 10 million. And our bill became 1 million. That's a big saving for us. We converted all our buildings to solar, and we're paying only 40% of the electricity bill that we used to pay. And third, we changed all our equipment we took the engines and put them electric. And that saved us a lot of money and no breakdown. So going to green or to alternative energy, not all that is expensive. There are things in our hand that are cheaper. Thank you.
I think this is a great panel. You know, we found lots of synergies between everyone, and you can see I'm smiling, and lots of future partnerships. So I just want to thank all of you and say that from our perspective, what we would like to see is, and show you, is a willingness to work with all of you to try and see how can we benefit people and the world by helping you solve some of the problems that you have, whilst you also help us implement some of these measures that we have. So let's all do as much as we can from our own comparative advantage at greening the world. Thank you.
Thank you all for your time and attention, and thank you all on the panel so much. Thank you.
Ladies and gentlemen, can we ask you to take your seats? We're a little bit late starting. We're still missing a panelist, but hopefully he will arrive in due course. So my name is Andrew Wilson. I'm the Global Policy Director at the International Chamber of Commerce. And this is an initiative that we're truly, truly, truly excited about. 2.5 years ago, before COP26, we started a process. So as you may be aware, ICC, one of our roles with a global standard setter for the trade finance market. So many of the products that facilitate trade, letters of credit, demand guarantees, are published subject to rules that we produce and administer. 2.5 years ago, before COP, we started a process to try and set out what sustainable trade finance would look like. And I promised my team it would be a 6-month process. We'd have a great deliverable at COP26, and then we'd just go on doing other things. 2.5 years later, we're still going on that journey. Some of you may have seen the launch of the second wave of the framework earlier today. But one of the big challenges we've seen is not only issues around standards, fragmentation, different practices, but particular problems defining what sustainability is in the transportation sector. So we're delighted to see this initiative to try and bring commercial firepower to what is a clear challenge if we want to make trade truly sustainable and truly net zero. And I can certainly say at the outset, this is an initiative, an alliance that we look forward to supporting through our network in over 170 countries around the world. And huge credit to Amazon as the driving force of this event and of the alliance. And on that note, I will hand over to Ingrid, the CEO of Zemba. I was about to say Zumba, but thankfully I didn't. Ingrid.
Great, thank you so much. Thank you for all of this interest in shipping decarbonization. It was just a few years ago that there wasn't much talk of shipping at COPs, and now we have a back-to-back agenda for the full week. So pleased to have you all here. I may be interrupted momentarily by Secretary Kerry, in which case we will certainly give him the podium. But I did want to take an opportunity to introduce myself. First of all, Ingrid Irigoyen. I am with the Aspen Institute, and I also lead the Zero Emission Maritime Buyers Alliance, which is what we'll be talking about here today. A few notes for the acoustics in the back of the room. If you have trouble hearing us, please do ask for or raise your hand, and there are some headphones. When the remarks conclude, we'll also be serving lunch, so please do stick around. And I was told there's a good chance that lunch will arrive, and so in the event that we're fortunate enough to have lunch together, that would be a lovely opportunity to connect with all of you who are interested in this work. So let me just say a few words about what it is that we're here to talk about today. As you all very well know, the maritime industry is a hard-to-abate sector, and we need all of the champions that we can get. And I see that one of our most important climate champions, ocean sustainability champions, has arrived. And I wonder if I could welcome Secretary Kerry to the stage. Let's see. So it is my great honor and pleasure to welcome the Special Presidential Envoy for Climate Change, Secretary John Kerry, to provide some opening remarks. And come on up.
Well, that's impeccable timing. Planned. The whole thing was planned. There's nothing like coming into a meeting that's already going on and you don't know what the hell's been said or going on. But anyway, really happy to be with all you. Ingrid, thank you so much. And thank you all for being here. I'm just trying to get my breath a little bit. I don't know where we walked from, somewhere. I really want to thank the Aspen Institute and Amazon for pulling this together, but more importantly for being part of this effort. And Kara Hurst, the Chief Sustainability Officer, has just been a huge partner of ours in this past few years, couple of years now, 3 years, going on 3 years right now. And I'm really grateful for that. We need corporate leadership. We just don't get there, won't get there without it. And I want to emphasize that to everybody. I have to say, I think we're all a little battered, not just by Mother Nature herself, who's been making crystal clear what our responsibilities are, but I think we're feeling a little tried by the years of words and the clarity of the science, which is equally clearly ignored by so many people in so many parts of the world. This is not, as I say frequently now, not a situation where we're waiting around for some terrific scientist to break a new code or create a new algorithm or somehow come up with a new formula. We all know what this is all about. And that's part of what is so frustrating about it. And it's about emissions. How we heat our homes, how we light our homes and factories and buildings, and how we travel. Choices we make, we humans, are making the choices that are putting the entire planet in crisis. Now, not all of you, you're here, and you know the fight. And the fight is against disinformation, denial, unbelievable abuse, in the sense of a continued process that we know kills people. I mean, we just have a new report that's come out from Harvard and George Mason, Harvard Chan Health School and George Mason, University of Texas, all together. And that new report, just released a couple days ago, says that coal and coal emissions kill twice as many people prematurely as the other gases. So 8.7 or 8.4, I can't recall which, million people around the world are dying as a result of the coal emissions that are still going up unabated in 2023, the end of 2023. I mean, how stupid do people have to be? It's almost a mark of sort of insanity or something. And if it weren't for the fact that God made us the one living species on the planet that is supposed to be able to reason and be rational and think and act on our own thinking, if it weren't, you know, we really maybe wouldn't feel this sense of responsibility, but we are responsible. And we need to change this paradigm. There's too much business as usual. Now, that's my preface to celebrating a contrarian step, which is what you all have done by coming together in one more sector. And I feel something growing. I honestly do. I think this COP can be a turning point. I think this COP is already in the first few days with the methane announcements, with the tripling of nuclear, with the tripling of renewables, with the doubling of energy efficiency, with $1 billion where we expected to get 200 million to deal with methane globally, where we have a number of initiatives where we were able to announce $3 billion for the GCF, and where we now know that the $100 billion that has been such a bitter point of contention for these years was met, not this year, last year. Last year, the $100 billion was met, and it will be met again this year. So now's the time to get real about the choices we have to make about how we're fueling things, how we're powering things, energy. And that's what this meeting is about. We're allegedly here to talk about a hard-to-abate sector. Now, as the person who was privileged to lead our delegation in Paris, I will tell you that in Paris, we never heard or spoke the word methane. Think about that. It just wasn't on the agenda. 50% of the warming of the planet is due to methane. And it is 80 to 100 times more destructive than CO2. And in the later years, 20 times more destructive. So the way we're going to win this battle, and we still can win this battle, that is true. We were at 3.7 to 4 degrees when we went into Paris. Now we're at 2.5. It's not where we want to be. We could have been lower. We're not, because not enough people are following up on the pledges they made in Glasgow and in Sharm el-Sheikh. But we're doing better than but most importantly, we've proven to ourselves we can make the difference, because the IEA has told us that if all the promises of Glasgow are fulfilled, we would be at 1.8 degrees by 2050, and if we hit net zero then, and if we did Sharm el-Sheikh on top of that, we would be at 1.7. So if you're at 1.7, don't you think 1.5 could be in reach by people who really want to improve something on the planet? You're damn right it could. So that's what this effort is important. Why? Because if shipping were a country unto itself, it would be the 8th largest emitter in the world. And shipping fits into that hard-to-abate sector, as does concrete and cement and trucking and air, aviation and so forth. But we're learning, because people are finally applying themselves to deal with these places, we're learning that it's not out of reach. It's not as hard as we thought. Frankly, I think that shipping sort of fit into the, into this isolated little place of hard to do, and people didn't want to wrestle with it, partly because it was more of a state of mind than a reality. So for many shipping companies, there was no incentive to spend heavy capital in order to try to reduce emissions with new technologies or fuels without some sort of demand for the green shipping. And so in the First Movers Coalition, what we did was bring that first about 25 companies together. It's now up to about 100 companies, major companies with really responsible CEOs and sustainability officers and so forth, who are in this fight. So you have Apple and Microsoft and Amazon and Google and Salesforce and Boeing, Ford Motor Company, General Motors, Lafarge Holcim, great huge cement maker in the world. And you have shippers who came to the table when we initiated the First Movers Coalition, and those shippers agreed that they wanted to create a platform for their transition. And that really has made a difference. Maersk, Yara, MSC, largest container shippers in the world, the three of them, stepped up and said, we're going to build or lease carbon-free propulsion ships. And they did, and they started to do that, and the build-out began. And now, 3 years later, we are looking at an unbelievable number of ship orders that are in right now, and a transition to zero carbon ship propulsion shipping. And they're part of this transition to create a platform so the world's leading global companies can make purchasing commitments to create early markets for critical technologies. We've proven this can work in certain areas, and by banding together here, collectively committing to purchase these zero-emission fuels, the companies involved are making a statement about how to decarbonize shipping on a broad-based basis. Besides, this has already been a pretty good year for shipping, because I remember speaking in Oslo last year. I guess it was earlier this year. No, it was this year. It's all, you're having fun, folks. It's all the same. But in July, the IMO followed the advice and counsel of this a lot of groups that were pressing forward, and they revised their greenhouse gas strategy, strengthening the level of ambition. And that level of ambition is a really important step in getting the shipping sector to make a strong contribution to keeping 1.5 degrees alive. So it's fair to say that your companies and others who are part of the cargo owners for zero emissions vessels who signed the COZEV 2040 ambition statement are urging now full decarbonization by 2040. And that has raised ambition with that strategy. It's a tremendous step forward. And then in September, Zemba's launched. Zemba, obviously, one of those remarkable acronyms we always come up with for everything. I think we have to figure out how we're going to have a acronym-free zone somewhere someday. But it's fair to say that your companies, honestly, who are part of this effort, are making a world of difference. And the launch that you made of a request for proposals for enough fuel to power the transport of 600,000 containers of goods over a 3-year period has really built on that momentum. So I'll just wrap up quickly by saying to you, just 3 days ago, as part of the Green Shipping Challenge co-hosted by the United States and Norway, with Prime Minister Støre being there and really getting into this, it was wonderful to have Kara there, Kara Hurst of Amazon, as part of the event to announce that 4 more companies, Mondelez International, Pledge, Reckitt, and REI Co-op have joined Zemba. So this is growing. Leadership does matter. Setting the example matters. So folks, you're charting a new course for the sector. You're not only tackling your own Scope 3 emissions, but you're changing the dynamic for consumers all around the world. And that will send the signal and reinforce the signal that every level of our societies can have an impact on what we're trying to do and must do. So I look forward to shopping zero emission in the years to come, if they ever give me time to go out to a store. And I'm really confident that because of the work that you all are doing here, we can actually achieve what we're setting out to do. And most importantly, understand the other side of this journey does not take us to a place of sacrifice or less quality of life. It's much better life when you don't have lousy air poisoning your land, your water, your air, and when you don't have people dying as a consequence of the choices we're either making or not making. That's on the other side. An actual safer world in which you don't send young people to fight and die in order to defend the source of energy, which could have been at home rather than in the Middle East or some other part of the world. So this is better, healthier, cleaner, safer, and frankly, far more productive and far better for a virtuous economy in the future. Thank you for being part of it. Really appreciate it.
All right, excellent. So inspirational to hear from one of our great tireless champions for ocean sustainability and of course for climate action as well. And to have his nod for our initiative, of course, means so much to us. So I think it may be obvious, but I think it's worth saying that the reason that we formed the Zero Emission Maritime Buyers Alliance is to address 2 core issues in shipping. And instead of beating around the bush a couple years ago, we decided that we really needed to just tackle the core challenges head on. And those are the cost delta between zero emission solutions and fossil solutions in shipping, and a lack of demand for those more expensive solutions. So these new solutions will come at a premium in the early years. That is the challenge. Until sufficient policy support is able to close that cost gap and bring these solutions to scale. Unfortunately, we cannot wait. We cannot wait another minute. And so it is our corporate leaders who are here today on this panel, and we have a significant number of companies. I'll let Kara tell us how many companies we have joining Zemba so far, but it's an impressive group that is taking this challenge very seriously and is signaling a willingness to pay. Now, not a blank check, not an infinite willingness. And so that is why we have run our forward procurement, our advanced market commitment, as a competitive tender. The good news is we launched in March. We released our RFP in September. We have a number of excellent bids in hand now, and we'll be making decisions over the course of the next few weeks and making more announcements in the spring. So stand by for that. And as the Secretary said, we just had 4 additional companies join just a few days ago as part of the Green Shipping Challenge. So we're feeling very bullish, and of course, none of this would be possible without our corporate leaders. And among those, Kara Hurst is one of the most important folks that has been involved in this Zemba work. Without Amazon's leadership, we would be not where we are today. And so I want to give you an opportunity to give us remarks and reflections on this work. And then actually, quickly, just real quickly, do we have Gilles? We're missing one of our panelists. Gilles from Schneider Electric? No? All right. Would anyone like to play the role of Gilles? Okay. All right. All right. Kara.
Well, I'm Kara Hurst. Thank you, Ingrid. And Ingrid did such a phenomenal job with Zemba, and it's really exciting to see all of the growth. I think many of you in the room know Amazon. Our business includes physical retail and online retail, but also cloud computing, and a number of other growing businesses in healthcare. But many of you may wonder, why we're involved in a shipping initiative. We obviously send a lot of goods around the world, and we're really committed to very bold climate action. So I'm just here today to tell you a little bit about why we're involved here, why we think it's very, very important. And also, if you're curious, to invite you into this work and to share with you why we hope you'll get involved in what we're up to. We committed to the Climate Pledge in 2019, which is our commitment to be net zero carbon by 2040. And we did that and issued it as a pledge because we hoped that others would come along with us in that action, because we know that collaborative action is needed, particularly in the hard to abate sectors. And so over the past 4 years, we've actually had 450 other companies come along with us in that, which is an incredible amount of action over 4 years, particularly during a global pandemic, to see sustainability really stay at the top of the private sector's agenda. And so we co-founded that with Global Optimism, which is co-founded by Tom Karnak and Christiana Figueres, who of course was one of the architects of the Paris Agreement. And we were looking at the science. We knew we needed to move faster. So I think that bold action to be 10 years ahead of the Paris Agreement and commit to net zero by 2040 is really a very strong signal by the private sector. And those 450 companies are around the world. So that's 58 different sectors across 38 different countries. It's a truly global movement and represents many, many different industries, including that in the transportation sector. Our efforts to decarbonize our business really do span across our built environment, our transportation sector, and really lean into, in particular, also our renewable energy commitments. So at the time, we committed to be 100% renewable energy across our global operations. We committed to that number at 2030. We took a look at that a couple of years ago and decided we thought we could move faster. So we've pulled that back to 2025, and we're currently at 90% of that number. And just to give you a scale, one of the things we really look at is also how do we use our scale for good? So how do we, when we think about demand signals, we think about what we can do to give you a sense of kind of what that is on our portfolio. We have now a total of 479 utility scale and on-site solar projects around the world. That's across 26 countries, and it's a portfolio of 26 gigawatts of renewable energy. So that's kind of the scale at which we're operating at. It's a large capacity of renewable energy. We're the largest corporate purchaser of renewable energy in the world. It's enough to power 6.7 homes across the United States, just to give you a sense of that kind of scale. So that's what we're talking about when we think about demand signals. We also looked at, electrification of fleet as another way, that transportation for us, again, being one of the things that we really want to go hard at. So we issued at the time in 2019 the largest ever order of electric delivery vans, and we ordered 100,000 electric delivery vans from a company called Rivian. We have over 10,000 of those on the road already, and we'll have 100,000 of those on the road by 2030. So we are really looking sector by sector to send those demand signals, transform, and really show industry that we're serious about wanting products and services to make operational changes within our business and decarbonize really fast. we're looking again in ocean freight, and as Secretary Kerry mentioned, when we saw the First Movers Coalition a couple of years ago, we were excited to join and to make an ocean freight commitment. So we made a commitment at the time that we joined First Movers in that sector to have 10% of our goods and services shipped globally to move on zero emission fuels by 2030, and of course 100% by 2040. And at the time, we're also happy to be a part of co-founding the Cargo Owners for Zero Emission Vessels, COZEV, one of the acronyms that he mentioned, bringing together cargo owners to help achieve those goals. And I don't want to repeat everything that was mentioned there, but we are really in the market to continue to explore and test and find sustainable innovations across freight and air and ocean transport to help reduce emissions on some of our, both our longest haul, kind of in middle mile, and across ocean freight on our longest routes. And we've purchased bio-based fuel service to help reduce our carbon emissions now. We also launched a Climate Pledge Fund, which is a $2 billion venture fund, and we invest in early stage decarbonizing technologies out of that fund. And we've made 23 investments out of the fund to date, and those cross things like regenerative ag investments, things like carbon cure for our cement that we're using in over 40 of our buildings so far, which have brought down the embodied carbon of buildings close to 20%, and also moonshots like electric aviation, and Amogy, a startup that's developing an ammonia to power system that eventually may power a cargo ship. So now just to get into maritime for a second, in March, we were part of launching the Zero Emission Maritime Buyers Alliance, ZEMBA, of course, to help expedite the delivery of emission-based, zero-emission ocean services with our co-founders Patagonia and Shibo, and of course the Aspen Institute. And we really think this is a huge step to unblock some of the challenges and accelerate the commercial deployment of zero-emission shipping and enable these economies of scale and help to move maritime emissions, minimize maritime emissions, really much faster. So over these past 6 months, of course, we've been really happy to see this group grow very fast. And now we have 25 companies in the group. So that's kind of another signal. As we've seen the Climate Pledge grow, we've also seen this sector grow very, very fast. And we're happy to see many companies such as Flexport and IKEA and Levi Strauss, Lululemon, New Balance, Nike, Philips, Schneider, REI, Brooks Running, Chewy, many others join that group. So again, very diversified sector, but sending strong demand signals that we want this. And Secretary Kerry mentioned also the tender that was issued for the 600,000 20-foot containers that we want over the next 3 years. So that demand signal is out there. We're looking forward to seeing the results of that tender. And we want to just say we welcome others to join us. It is an open invitation. I know there's many here today who can tell you a lot more about the work underway, because we know this is a collective effort and a lot more to do. So thank you for allowing me to share a little bit about where we're up to at Amazon. And there's many of us here from the Amazon team today, happy to share more. So thanks for the opportunity to share, and we're really excited about what's happening with ZEMBA.
Great, thank you so much. So now I'd like to turn to another company that has been a tremendous champion with us from the very beginning. We engaged IKEA, or IKEA, depending on where you live, in a conversation about how can we decarbonize this industry. And we were really at the time, just all of this was a twinkle in our eye, and we needed partners, and we needed partners who could help us ground our ideas in reality, which is very important if you're going to actually make change. And IKEA really stepped up and has been such an essential thought partner to us since the very beginning of this work, and also was the first member to sign up after we announced ZEMBA. And so it is with great honor and gratitude that I introduce Elizabeth Monk, who's Global Sustainability Manager with the Inter-IKEA Group.
Thank you so much, Ingrid. So, in IKEA, we move our home furnishing goods in different parts of the world by rail and trucks, over land, on inland waterways, and across the oceans. Tackling the climate crisis and addressing the impact of transportation is challenging, that we know. It is complex, that we know. And on top of it all, we are under an extreme time pressure. This is all a given. Now is the time to be in solution mode, and it is doable, and we can do it. Transportation is a prerequisite for us to deliver on our vision to enable a better everyday life for the many people. It is a license to operate. We in IKEA, we are working towards a clean and fair transportation across transportation and logistics. And by clean, we mean moving our goods on zero-emission solutions, using 100% renewable energy across our operations. And by fair, we mean to create a better everyday working life for the people moving and touching our goods in the IKEA supply chain. Our ambition is to contribute to a positive experience for people and communities connected to our goods flow. Collaboration is key to solve complex challenges. The technology solutions and the fuels alone will not solve it. It's all about people. It's all about people using them. Because we do not only need innovation in technology, we also need innovation of how to collaborate with each other. So how do we create new and innovative ways of coming together across value chains to collaborate and co-create, to deploy and scale the solutions efficiently and with speed? So IKEA is a member of ZEMBA, and we believe ZEMBA is a good example of an innovative way of collaborating that will generate results. We know that even though, as IKEA, we are a big global shipper, we cannot alone transform the industry towards zero emissions. We need to come together with others and be part of the solutions in this very action-oriented way. And we are so happy to see an increasing number of companies joining ZEMBA. And we are hoping also for many more to join. Together, we are making a difference. We do not believe that sustainability should automatically come at a premium. Sustainable solutions should, of course, be the default option and the better option for the customer and the environment. Sustainability products cannot be a luxury for the few. And to create the necessary climate impact, people need to afford sustainable products. We see the need for policy support. We see the need for investments. We see the need for collaboration to create the zero-emission solutions for ocean shipping. And we are willing to collaborate and co-create the solutions. And the understanding of the climate urgency is out there. And the solutions for zero-emission shipping are within reach. The momentum is building up, along with an increased confidence and trust in the direction. And now is the time to be in solution mode and to mobilize together so that we faster reach a positive tipping point where zero-emission ocean shipping becomes the new normal. It's urgent and it's doable. Thank you.
Okay, great. So last call for Gilles from Schneider Electric. Excellent, yes. It is such a pleasure to introduce you. So, Gilles, I didn't have a chance to practice your. I'm going to say
French name.
Desroches.
Yes, perfect.
Did I do well?
Perfect.
Very good. And you are the Senior VP for Corporate Citizenship at Schneider Electric.
Yes. Thank you. Just only a few words to complement the first speech. I'm very happy to be here with you. Perhaps for many of you, to find Schneider Electric in such type of coalition, it's not totally normal. But I would like to explain why a company which has a purpose to electrify the world is very happy to join this coalition. If we look at the 20 last years of commitment in sustainability, the companies, the state, were alone to define their own journey and to consider that they would like to be the champion of sustainability. I'm sure we are in a new stage, in a system stage. We were speaking about stakeholder dialogue, stakeholder management, and so on, but it was only to speak together. Now we are in a new stage where we have to work together and to put in the first level the common good. And we know when we are here that the first common good is to reduce climate change. And the second thing is to consider, when we are Schneider Electric, that technology is a part of the answer. We are speaking today about energy efficiency and sufficiency, and we need both. I'm here because we are very happy in Schneider Electric to join this coalition in last September. Why? Is because we are from very, very different point of view. We are not a large skipper in Schneider Electric, but I'm very interested at two levels. First, in Schneider Electric, we have our carbon pledge, and we would like to be carbon neutral, scope 1, scope 2 in 2030, and to reduce our scope 3 by 40% in 2032. And if we would like to reduce our carbon footprint, we need to reduce the carbon footprint of logistics. We have 200 plants at the worldwide level. We sell products everywhere. It's why, as a client, we are very happy to see such type of coalition. But we are here more because we are a technology provider. And when we are, I'm not very expert to speak about shipping, but I can speak about electrification in the ports. And the port electrification, it's a large stake. For decarbonization, and for the life of people too. You know that the ports are very close to cities, and the question of air quality is very important. And in many cities, we consider that the reduction of the quality of air in the city is linked to the port. We have now the solution to electrify the port. We have now the solution in order to first shift to electricity to all the activities that we have in the port, with the container, to transfer the container and so on. And we could have the relevant solution for the boat when they are in the port. Just we have to have in mind one thing, and certainly I would like to give this information and to stop just after. For that, we have to multiply by 7 the electricity production close to the port. And certainly port could play tomorrow another role than only to be at the end of the line of the grid. When we think the future, when we think smart city, when we think the manner to consume, the port will be a part of the city in a circular mode with a smart demand, with the manner to organize the dialogue between offer and demand in order to reduce drastically the pollution in the port, not only about carbon, a lot of other pollutions. And for the people who are here, it's very important. And the second thing, it's a part of the carbon emission of shifting, and it's why it's key to have a relevant solution. Today, we have some solution for that. We have to continue to progress. It's why Schneider Electric is in this coalition, because we are here in a good dialogue with many different actors, private and I hope more public sector tomorrow, because we are speaking about infrastructure, we are speaking about people, climate change, cities, smart city, and so on. It's why, with the innovation that we have today, and we have some experimentation at the worldwide level about this topic, we can scale up, but for that we need a PPP, we need to have finance, we need to understand that this topic is one of the main topics at the top level to decarbonize the activities, to reduce carbon emission. And just thank you for this coalition, thank you to promote that. We have some company now, and it's a good, very, very good level with a good discussion between the actors, but sure, we will have some other actors in order to be more efficient for the next COP.
Thank you. We're so delighted to have you here on the as part of the group, and of course also to have Schneider Electric as part of our coalition. So I would love to know whether lunch, Ashley in the back of the room, do we have lunch? No lunch. We lured you in with lunch, but it was all a trick. So unfortunately, lunch has not arrived, so our sincere apologies for that. But we would love to mingle and have a little bit of coffee with folks afterward. And if our speakers are willing to stay and speak with some stakeholders and some interested parties, we would very much welcome that. Those of you who are perhaps representing shipping lines, if you submitted a bid to our first RFP, thank you very much. If you did not, get ready for the next one, and know that we will be taking our Zemba concept, which we have organized in a certain way for this first round tender, and we will be doing some creative work in the new year to think about ways to expand our work into other segments of shipping, to potentially focus on certain green corridors, to potentially support certain technologies that we think could be very fruitful. So we're always in a stage of innovation and creativity, and we will welcome all of your good minds. If you're a fuel producer, please make fuel. We keep hearing that there's not enough of it. And if you're a cargo owner, if you're a company that moves freight by ocean, please get in touch, and we would love to get you involved, both cargo owners and freight forwarders. If you buy freight, you can buy through Zemba and hopefully get economies of scale, and we can make a much bigger impact together than if we act individually. So with that, I'd like to thank our speakers very, very much. Your leadership is tremendous. It is so important to this transition. We're doing what's hard. It's about action. It's about spending money. It's about being creative. It's about driving change, and it's about coming together. And I think we're doing that with this coalition. So with that, thank you very much again to Amazon for sponsoring, to our speakers, and to the International Chamber of Commerce for hosting us here. Thank you.
Welcome to all. Thank you. Thank you for being here today. Thank you to the International Chambers of Commerce, to the UAE Ministry of Economy, to the COP Presidency for test. Let me reiterate the thanks to the International. I really want to thank everyone. Again, thanks to the International Chambers of Commerce, to the UAE Ministry of Economy, and to the COP28 Presidency for putting this panel in a timely manner. Global trade is a vital engine of economic development. It allows countries and their private sector to integrate into the global economy, widening access to greater ranges of products, of services, of digital solutions. The value of global trade was about $32 trillion last year, with the WTO estimating the trade finance to play a key role in facilitating and in supporting as much as 80 to 90% of international trade. However, availability of trade finance remains among the most often cited obstacles by small and medium enterprises. If we want to add to that decarbonization of the value chains, then this will make trade finance an even more important challenge to tackle. There's immense opportunity for countries to maximize the role of trade finance in tackling environmental and climate change challenges and raising the standard of living to everyone. Financial institutions are critical actors in the promotion of sustainable trade and climate change policies through financing environmentally and socially responsible trade activities. What challenges are these financial institutions facing for financing sustainable trade? Are they the only players who have a role? How can we push for more sustainable trade while not restricting the global economy? These are a few of the questions that we'll explore today. The session will take a form of a panel discussion and explore how environmentally responsible practices can be incorporated in trade finance. Joining the panel today are 5 key actors in financing for sustainable trade. Please allow me to introduce John Denton, Secretary General, International Chambers of Commerce. Miho Shirotori, Director, Division on International Trade and Commodities, UNCTAD. Thank you, Miho. Barry O'Brien, Global CEO of Commercial Banking, HSBC. Thank you, Barry. Farmida B, MENA Chair, Norton Rose Fulbright. Thank you, Farmida. Samaila Zubairu, CEO, Africa Finance Corporation. Thank you. Before we start, John, can I pass you the mic so that you can tell us more about the release of ICC's Principles for Sustainable Trade?
You can, and I'll stand up to say it as well. First of all, we've got to celebrate. Today is the first time in 30 COPs that we've actually had an integration of trade and climate. The ICC has been arguing that for some time, and it was only when we were actually able to join with the leadership of Dr. Ngozi at the WTO and my friend Rebecca Grinspan at UNCTAD, and we got into the ear, frankly, of the presidency of the UAE COP28, they were able to pull this off. So this morning we launched this for the first time, and and this is an incredibly important opportunity for us, as you say, because of the importance of trade to the global economy, and also the opportunity, I think, to do something about aligning the whole of the trade finance market. As you know, it's ICC instruments that enable trade finance to flow, and that's $10 trillion worth of ICC enabled trade finance. But what people don't also understand is that through tools like Incoterms, certificates of origin, there's another $7.5 trillion that are enabled. So 17.5 trillion. In fact, 75% of merchandise trade globally is enabled through ICC instruments. And actually, as I was in Beijing the other day, and I had the privilege of meeting the Premier, and I did point out that 17.5 trillion equates to the GDP of China. And so he looked at me slightly differently when I said that to him. it is an important day for us. I should also shout out, we have the Secretary General of ICC in Germany, and I think I saw the Secretary General of ICC in Sweden. So this is a very important launch that we're doing today. One of the things, and the Secretary General of ICC Finland, welcome. So, and it goes on. So we're here. So I just wanted to point out that one of our ambitions here is a combination of what I call AAA, which is ambition, action, and alignment. That's what we're trying to achieve through COP28. Ambition here is to take the whole of that $10 trillion and align it through grading processes with sustainability, as you've just described. Action is not talk about it, but actually do it. It is heroic, what we're doing. But alignment, because we know that we need alignment across the whole of what is a very complex sector, and we'll be talking about that during Q&A. We couldn't have done it, I think, without BCG. We couldn't have done it without the support of banks like HSBC and other players as well. And we're not done yet, and what I'm launching today is Wave 2. I launched Wave 1 at Sharm el-Sheikh, Wave 2 now, and now we're into the meat of it all, and I really want to thank everyone for their involvement, and I really look forward to the opportunity to chat a little bit more about this. But my view on COP28 is that we are not waiting. We are moving and acting where we can in line with our ambition, and our ambition is to take this incredibly important sector and part of the global financial architecture and grade it in a way that can enable sustainable trade to flow. So thanks very much.
Thank you very much, John. Miho, let me turn to you. Why is global trade so important in helping reach a more sustainable economy going forward?
Thank you, Remy. Thank you very much. I think, as John said, today was such a day that at the plenary we confirmed that the trade is a solution for climate action mitigation, climate change mitigation and adaptation. Let me just say, just the two major reasons why trade really matters, and probably two more caveats though. The number one is that trade, no country is self-sufficient in the products and services that are necessary for climate change mitigation and adaptation. So therefore, the cross-border exchange of goods and services is necessary to ensure the availability of those environmentally sustainable, environmentally friendly goods and services in countries. More importantly, though, the trade actually increases the affordability of these products. You don't trade if the products and services abroad are not cheaper or of the better quality than the product equivalent available in the country. So that means that the affordability is increased. Now, that is important element, and also the second important element is the power of trade policy. Trade policy is one of the policy tools that have a direct and sometimes immediate impact upon the markets. Particularly import policies like tariffs increases or decreases the price of the products, so affordability, quota determines the availability. So it is a very powerful policy tool, and particularly because of the speed that trade policy can have some, can exert influence on the market. That is the reason why we think that trade policy is a very, very important thing for accelerating, speeding up the climate action in the market. Quickly, two caveats. Number one, it's that trade is also historically has seen as the part of the problem. You know, there has been an estimate that the 60% of the carbon emission in the market is related to trade and supply chains. But this is the reason why UNCTAD, my organization, is looking at reducing the carbon emission in the maritime transport, because 80% of the merchandise trade in the world are carried by the sea. So if we try to reduce the carbon emission in the maritime transport and also the port management, that can have a significant impact. Second caveat, I said that trade policy is very, very powerful. That's because of that, trade policy by major economy can significantly distort the market. If you are a major economy and try to increase the affordability, availability of environmental goods and services in your country, impact goes beyond your country and it affects the global market. And the impact is definitely felt more strongly by the developing countries, which are smaller and more vulnerable. So this is something that we also have to think about, the use of trade policy for the benefit of sustainability.
Thank you very much, Miho. Samaila, please, any additional thoughts on why global trade is important to reach a sustainable economy?
Certainly. I want to also join the other panelists that have acknowledged the importance of having a conversation of trade at COP. Because like Miho just mentioned, you know, a big part of the carbon emissions are in trade and in the supply chains for trade. So clearly, we in Africa, we operate and own some ports. We own 4 ports, and we own industrial zones. One of the industrial zones is carbon neutral, and it has made us to realize the importance of having integrated value chains and their contribution to reduction of greenhouse gas emissions. Last year, we published a white paper on Africa's pragmatic path to net zero, bearing in mind that Africa has little emissions today, and Africa also has carbon sinks that can absorb the emissions it makes. However, this window is narrowing because Africa's population is growing fast, and the need for more green minerals and metals for the energy transition is going to cause a lot of mining to take place in Africa because Africa holds 40% of these minerals and metals. So clearly, a look at trade and a look at the supply chain where we have more value capture and more processing in Africa is one of the tools for carbon reduction going forward. It's also one of the tools for accelerating the energy transition. We have invested in a mine that used to export 36 to 40 cargoes of raw manganese to Asia, but we've installed a smelter now that will reduce those shipments to 4 to 5 a year. If you look at the reduction in the carbon emissions from that, you can see why trade is very important. And this is something that needs to be replicated at scale, mainly because in Africa, you have the renewable energy to do the processing of the minerals and metals, but in other parts, you're going to use already existing energy stock, which is really already carbon intensive. Our view, and we think that the world should take an interest in this, that most of the minerals and metals, if we take the battery value chain, for example, which is about $8 trillion, you know, for electric cars. If you come down to batteries, about $1 trillion. But if you just look at mining, that's 11 billion. If you can move the battery, can cut up recorders, that's about 380 billion. So that's a lot of value that we can create and save for trade. But more importantly, we can reduce significant emissions if we do processing of these minerals and metals that we know we require locally on the continent. And it is in the interest of the world for that to happen, because we know that we're not on the path to meet our net zero targets. So it is important that we take a different look at the supply chain today, look at how can we do the hard to abate sectors in areas where there's renewable energy. How can we use more green fuels that pass through regions where the green fuels are available? So we just commissioned a wind farm in Djibouti. We're expanding the capacity of the wind farm to include hydrogen for cleaner fuels. And Djibouti is really a hub, you know, for transshipment and transfueling. So you can imagine the impact of that on reducing carbon emissions globally. So this is a very important topic. We just need to move from the words. We need to look at what can we do, you know, segmentally to reduce carbon emissions in trade.
Thank you. John, let me turn back to you, please. Your organization is a key actor representing the private sector. What are the challenges that private sector face today?
Well, it probably would have happened earlier if there weren't challenges, but also if we didn't have a clear ambition here. So
raising the ambition and aligning the actual broader ambition of all the players in enabling trade finance has been a critical challenge, I think, for the global private sector. But within the mix of that, there's really three key areas. One, I think we'd all have to agree there's complexity here. There's complexity within the actual nature of a trade finance transaction itself. There's also differences in regions and in different areas of the world. And also there's a kind of ecosystem that operates that you need to ensure that you kind of don't fiddle with it and have an outcome by accident, which could have devastating effects. So there's three key places, three key issues that are there. When you look at complexity, there's something like 20 different players that operate in trade finance. So we look at it thematically. So we look at it through the lens of the importer, the exporter, the underlying goods, and ultimately one of the players there is also an important thing for us to think about, because we just had a session here on maritime transport, is the transportation and distribution system that's used. So there's four areas that need to be in balance, so we put those thematically, and they all need to be in balance to deliver on sustainability, so we're working through all those. There's also challenges. I think there's a particular challenge in just the capability in the maritime sector, by the way. So there's that issue. There are different ways of understanding sustainability as well in different regions, different countries. So we need to get a grip of that as well. And then, as I said, there's an ecosystem that operates that you don't want to be clumsy about. So you need to recognize its importance, but respect that as well. And also recognize that not all players in this game are large. There are a number of small players. SMEs thrive and must have access to trade finance. They don't necessarily have the capability available to them. So we need to get all those elements in balance and then start the process of delivering, I think, the sustainable trade framework, which is what we're doing. And which is why we're actually taking this in waves rather than over-promising and under-delivering, because we're learning as we go here, which is really important. So I hope that gives a little bit of light for you.
Thank you, John. Farmida, let me look back to you. You advise many private sector players. What are the challenges that your clients and partners are facing? Are they the same ones that John was mentioning, or additional ones?
Thank you. Does that work? It does, okay. Well, I think, I echo John's comments about the complex nature of trade. So whether you're dealing with, when we're dealing with our private sector clients, they tend to be large multinational corporations, but of course in their supply chain, they have a huge number of parties, and ultimately down the line you could have individuals who are perhaps part of SMEs in jurisdictions where the rules are not well established. So the complexity, the multitudinous nature of trade finance has meant that it's been harder to create some of the standards which John and his team at ICC are now working on so well. And of course we saw that with things like green bonds and sustainability loans, where you were dealing with high value, low volume transactions, it was much easier to be able to bring in a focus on sustainability. And I think another issue is that trade has been going for thousands of years and the practices are well established. So trying to disrupt those, and we've been trying over the last 10 years, but getting that established and contained in the market has not been easy, and that's because of the complexity. And then I think linked to that has been that question of who pays. Who pays for the certification, the diligence, the reviews? Thus far, it's been, largely speaking, the large multinational corporations who've been doing it because their shareholders want them to do it. There's been some contribution, of course, from the IFIs who've been trying to promote this. And, I think the banks have been in a difficult position, and they've been arguing for some time that there need to be incentives through capital relief, which is not an argument that has been accepted so far, but I think as standardization improves, will perhaps be. And then, until now, there have been issues around reliable and consistent data, disclosure requirements. Do the sustainability agencies come up with a consistent response? There's a sense that technology will help to address some of those issues going forward. And then I think the last caveat that I would make is, as we come up with these standardized approaches, the one thing that we have to remember is the trade finance gap, so that, you know, the gap for those people who are perhaps at the bottom of this chain. If we're creating standards that are created by Western approaches, Western understanding, then that could exclude even more some of the SMEs, the individuals who desperately need trade finance in order to be able to develop. Because fundamentally, we're here to try and improve lives for the majority, and there is a danger that unless we're very careful, we could make life harder for them going forward. So there needs to be that caveat from my perspective.
Fully agreed, Farmida, fully agreed. Barry, we talked about the importance of trade and sustainable financing for trade. We've talked about the challenges that we see. To close the first round of questions, how can the provision of trade and supply chain finance support sustainable trade for you?
Yeah, thank you. When I saw my photo when I came into the room, it reminded me of how complex this is. I had hair, John, at the start of the journey, and it is a very, very complex topic that we're looking to address for lots of reasons that have been mentioned. As I think about trade, I guess trade itself is the backbone of the global economy, and then trade finance is the backbone of trade. I think it's the real intersection of two huge topics that have to be addressed. I would say 80% of the emissions that we see are linked to supply chains. So there's a huge target, but a huge risk if we don't address those emissions that occur through supply chains. And then there's a constant dialogue around the need for finance to address this problem. And again, it's $2.4 trillion required in emerging economies every year between now and 2030. If I look at what's happening on a very real basis with our customers, I guess I'll split this into maybe two different parts. The first one, it's the provision of products that organizations like ours do to support customers in terms of sustainable trade. From a very basic level, it can be sustainable trade finance, and there's some great examples of how that's helping the circular economy. Sustainable guarantees, because there is risk in this space, and that's something that I would say actors at all parts of the supply chain are worried about. Sustainable sourcing, we've seen the dialogue shift demonstrably over the last number of years. And then to your point, working capital. And working capital from firms that are the S and SME right up to the large corporates to facilitate the transition that needs to take place. But if I take it one step further and we look at sustainable supply chain finance, it's a great example of where we're seeing real traction taking place. And just to crystallize that, I guess the 2 points I would make. One, we're seeing some of the bigger corporates leveraging their capability and their balance sheet right across the supply chain. And there's some really good examples like Walmart that have been able to do that. So they leverage their balance sheet. That then enables suppliers to benefit from cheaper financing. But it also acts as an incentive across supply chains to meet certain targets in terms of sustainability. And then the other piece is it starts to address some of the asymmetry. So how do you create a more equal landscape such that the smaller businesses have access to some of the resource and the talent pools that ordinarily the bigger companies would only have access to? And as a bank, we are uniquely positioned in that we get to see that collaboration taking effect on a global scale. We've done a lot of work with the ICC because we also recognize that data is absolutely critical in all of this, and the provision of data and providing more transparency across the supply chain as well is going to be absolutely critical. So I think, like many subjects that will be talked about here in COP, collaboration is absolutely critical. No one partner, no one actor can do this alone. So it really requires a huge amount of collaboration to shift the tide on this.
Thank you, Barry. John, we've talked about certain solutions now and certain enablers like data collaboration and others. What progress has been done in the recent years on these solutions? And more precisely, what has the ICC done and how is it moving the needle?
Look, thanks very much. And Barry, just picking up on your comments, because I think in a way that helps. I mean, what we're seeing is a lot of heroic actions, but also really sensible actions by a number of the critical banks and players in the system. And we heard some great examples here. But I go back to my opening comments. I mean, what we're trying to do at the ICC is through alignment, enable scaling. Because in the end, as you said, you want to shift the tide. We want to transform, and you're not going to transform with bits and pieces and heroic endeavours. That's why we created the Sustainable Trade Framework movement. And frankly, it's something that only the ICC can do because of the nature of who we are. We are a not-for-profit institution, purpose-led, inclusive, 170 countries, part of the ICC, 70% in the Global South. We are the most inclusive business organization. And when we create that kind of platform, the point I always make is, well, what value can we derive from that? And our purpose is to enable business worldwide to secure peace, prosperity, and opportunity for all. And this is a key area. So the reason we are focused on this is not just because we curate through our instruments trade finance, because we are serious about enabling business. And we see the platform as one that we must therefore shape in a way as a platform to enable scaling of the work that you guys are doing, scaling of the endeavours that we hear from Africa, etc. And that's why we've created, and we're creating this framework over the 4 areas I talked about, which will provide the capacity for alignment as we work our way through, and therefore scale and ultimately transformation. Yeah, we could move faster, but we're moving fast as the speed of trust, and that's what we bring to this whole process.
Thank you, John. Michał, in your views, what are the gaps? What are the gaps, and why is sustainable trade not as prominent as other forms of sustainable finance?
Thank you. I just want to follow up on what Famida said, that you explained that access to trade finance is not necessarily equal. There's an unequal access to that, and depends on the, among the different groups of economic actors. On this point, I just want to say, for example, like an Asian Development Bank survey said that access to the trade finance by SME is still 45%. Compared to this, not access, sorry, the rejection rate to the request of trade finance in the case of SMEs is still 45%, when the rejection rate for the big companies still, it's high, but around 30%. Now, I just want to say that only yesterday we had a session here about the great opportunity that is proposed by South-South trade among developing countries in the area of environmental goods and services. The huge potential there. But now if the trade finance is perceived as a risky thing, and if it is perceived risky among the companies in developed countries, you can imagine how risky it appears to the financial bodies if it is a trade among developing countries and particularly SMEs. This is something important to the South-South challenge. There's a huge gap. But this is also important from the climate change mitigation and adaptation perspective, because as Africa, for instance, Africa has already achieved net zero. Other developing countries also have a very low level of CO2 emissions. So it's not, South-South trade is not really about reducing CO2, but not to increase it. So it is about, it's doing some things differently. Doing things differently. It's not going to be the repeat of the trade actions. It's going to be a different framework of trade actions. So we do need a different perception of the risks, associated with trade finance. And then I hope this is the area that this gap will be reduced in the near future. Thank you.
Barry, we cannot expect all solutions to come from financial institutions. We believe that governments, NGOs, large companies, as well as financial institutions have their role to play. Probably the ecosystem that John was discussing a bit earlier. How can such an ecosystem accelerate sustainable trade, and how much of this is already happening?
Yeah, so collaboration is absolutely key. To the question, no one actor has the ability to change the tide. The organizations like the ICC are playing an absolutely critical role in bringing the actors together. But it's governments, it's NGOs, it's corporates, it's finance companies, banks, all playing different roles, but in a very coordinated way. And just to break it down a little bit, I guess, there's a risk that I oversimplify this, but I think from a government point of view, we've touched already today on the role of policy, incentives, rewards, and when I say incentives, it's really the capital treatment that allows greater lending into this space, and it's been long talked about, and again, that is a critical factor. When I think of the NGOs, it's frameworks, it's programs, it's standards, it's measurement, and again, kind of acting right across organizations of different size, so ensuring that there isn't just a focus on the large companies, but also some of the smaller companies that are critical to this as well. For corporates, I think one of the things that corporates can do is they can obviously act across, in some ways, Scope 1, Scope 2, and Scope 3, and they have that leverage. And recently there was some research done that shows that 73% of the companies that will work in the supply chain for a corporate, even though they may compete with each other, they are willing to collaborate with each other to drive change. And again, it's how you push that collaboration. And then for banks like us, obviously providing finance, facilitating, and using the data and the products we have to de-risk some of this as well, because I think we are uniquely positioned to de-risk this on behalf of customers. But again, I go back to this notion that this has to be an ecosystem working, all parts working in conjunction with each other, because just getting one or two parts right is not enough. It's not going to drive the type of transition that we need. And again, as a bank, as part of that ecosystem, we are very, very committed to playing our role, and we take this incredibly seriously in terms of the role that we can play in that transition.
Fully agree, Barry. I noted all of these down, but two are more prominent. For me, at least, the NGO and the enabling programs to the SMEs to build the capabilities that we discussed earlier were missing. And second is the de-risking of the banks, specifically in emerging markets that are probably most at need of those funding.
Yeah, and just one thing that I should have touched on is, we have to recognize different paces of transition and different economies being at different points at the start as well. So when we talk about policies, it's really important that they differentiate. So it's not one size fits all. And as much as sometimes we feel that's the right answer, that may not be the right answer.
Absolutely, and that's an extremely nice transition to you, Samaila. By its very nature, the trade involves the movement of goods, of services between different markets and regions, with each having different standards, different norms, different level of access. How can we push more sustainable trade while not accidentally restricting the global economy or being sensitive to some markets who are in different stages of maturity, as Barry was saying?
I think the key thing we have to focus on is what are our objectives. Our objectives is to see how we can sustainably reduce carbon emissions in the value chain for trade. And to do that, we need to look at integrated ecosystems, whereby we look at a particular value chain and ensure that within that value chain, we are looking at what are the standards that we can have on acceptable carbon footprint, and how can we collectively work towards reducing that carbon footprint within that value chain. And at the heart of that for us is more value capture and more value retention in a way that we can reduce the volume of shipment, in a way that we can focus on how to look at facilitating trade within the value chain. And we have several examples of that. So at our various industrial parks that we've built, they are typically focused on different value chains. And what we've tried to do is to look at from the origin of the product that's going to be processed to the final export of that product, while providing for trade within the economy of various actors in that particular process. We've also tried to find ways to arrange or facilitate trade finance within that ecosystem, within that particular value chain. And we've tried to leverage on guarantees, using credit enhancement to lower the cost of financing within that particular value chain. We have also focused on how we can credit enhance financial institutions that are focused on dealing with SMEs to reduce their cost of funding. And I'll provide you some examples. So there's a particular development finance institution that's focused on SMEs that wanted to raise financing. But the cost of financing today, the interest rates were so high. So we put in a wrap for them that reduced the cost of finance for them by 400 basis points. Clearly, they could transfer that to their various SME clients. So really for us is how can we be looking at integrated value chains in a way that can reduce the volume of shipments? That's the first thing. And to do that, we need to have more value capture, more value retention within the local economy. And within the context of the green transition that we're all embarked upon, we should be looking at the significant volumes of minerals and metals that are going to be required going forward. And to know that we cannot process or trade them within the current system. We should also look at the fact that we're going to have a lot more energy intensity to process these minerals and metals. And it is better to process those in regions where you have significant renewable energy sources. And Africa is that jurisdiction.
Thank you, Samaila. With this, we close the intervention of our panelists and open up for Q&A in the room. If anyone has any question to any of the panelists, please let us know. Please, any microphone, please. Let me.
So we talked about collaboration being very important. We talked about that no single actor can achieve this alone. Yet no collaboration at this scale has ever been achieved before. So I was just curious about your thoughts around how are we going to achieve this? It's extremely complex. We need to bring together different actors that come from very different places with very different objectives and target them at the vulnerable parts of the value chain. Any thoughts on that?
Yeah, so maybe I'll start. I think one, increasingly there's recognition that this has to happen. So I think there is an undoubted call to action in terms of the world's need to transition. So I think that really focuses the mind. It will require organizations that can almost sit across, and that's why I go back to the way John described what the ICC do. You need organizations that sit across the various different actors to kind of bring them together into kind of a dialogue where everyone agrees to play the part that they do. And it's going to require some bravery on behalf of some of the actors as well, to kind of maybe play a role beyond what ordinarily they would do, right? So, and certainly from my perspective, we see many of the companies that we partner with and we bank playing that role. So I go back to corporates pushing the dialogue across the entire supply chain. Your example on the financing costs is a really good one, because that's an organization saying, I'm going to use my capacity and capability on behalf of other organizations. But you're right, it's not easy, and there have been many attempts, but I think we have to recognize that that there's no choice in this, it has to happen.
Please.
Sorry. I think if we leave it to individual organizations to do this on a voluntary basis, it probably won't get done. So I think it will have to come from sort of regulators, it'll have to come from governments. There will have to be a sort of a globally based requirement which changes the entire ecosystem of the basis on which trade is done. I think that's the only way to drive change within the kind of timetables that we've been talking about. We've seen for the last 10 years, I think, attempts in certain industries or to focus on certain products to try and drive change on a collaborative basis, and it hasn't then resulted in systemic change across the board. I think what drives systemic change is a mixture of regulation and incentives, and whether those are done on a national basis or even better on a cross-border basis, that is what will drive change.
If I can just share the example of a collaboration among it is called the Global Network of Export-Import Banks and Development Finance Institutions of Developing Countries. In short, it's called the GNEXID. And this is the group, they get together and try to figure out and solve the tangible problems that they come across or they hear from the traders in the area of South-South trade. So all the regulatory challenges, procedural challenges, finance capacity challenges, and so on and so forth. Still, of course, it hasn't really come to the area of problem solving, but already like sharing the experiences has been very, very useful, and then UNCTAD works really closely with GNEXID, and GNEXID is open for participation from the private sector side. So it would be very good to see you in the next annual event of the GNEXID. Thank you.
Any additional questions? Sure. Please.
Thanks, and really insightful. Thank you so much. Technology obviously plays a key role in this complex challenge. I was wondering if any of the panelists had any good case studies of how they've seen technologies being used at scale in sustainable trade.
I don't know if, yeah, sure.
I mean, that's clearly a very good question and a big part of the solutions going forward. So typically what we do is we work with several banks, and in working with those banks, they use technology. We also, like I mentioned, have industrial parks across various jurisdictions. And a big part of the architecture there is also technology. And part of the technology is really on understanding the costs, across the value chain, understanding the emissions, putting in place organs for traceability. So for example, the T-shirts that we make in our industrial park in Benin Republic, you can trace to the farm, up to the children's place that we export it to in the US. The furniture that we make, in the Gabon Industrial Park, you can trace to the trees, and it's technology that allows us to do that. So technology is very key in emissions reductions. It's very key in also having the data that allows you to negotiate to lower the cost of trade.
Thank you. My name is Faith Ngige from Kenya Private Sector Alliance, the host of ICC Kenya. My question is on the evolution of environmentally friendly policy-related actions to trade. And in this case, I think I'm making reference to cross-border adjustment mechanism that we are likely to see is going to affect the exports, especially from our region, to the regions of the globe where that is a good measure environmentally, but likely to affect trade in a very negative manner. So first of all, is just get the thoughts around it, and then what kind of collaborations can we forge so that the rest of the world is not cut off the supply chains in the name of environment. Thank you.
Any thoughts on CBAM?
People from the EU to talk about it first, but I can go from our perspective. So clearly that's an example of the need for collaboration and the need for early engagement, on rules setting and the caveats she mentioned on tariffs. That's a clear example of that. And really, there's still room, I think, for us to engage and for us to make clear what our part is, and how we can align interest, to ensure that before the rules take effect, everything is considered, and that we're not, I would say, entrenching all the risks, with this, because, we're trying to solve for one thing, but we might be creating bigger problems in another area. And a big example of that is, the additionality concepts in the carbon markets, where we're saying that we're giving no credit for the trees that exist today and are absorbing the carbon dioxide from the atmosphere. We're only going to allow, credit for new trees. So we're saying that people should cut down the trees that are already absorbing the carbon dioxide today. That's what we're saying. So it's the same way we need to look at all these, policies and rules and be sure that we're not creating perverse incentives that would ultimately work against our objective of, net zero down the line for all of us.
Yeah, I fully agree. The collaboration is still as important now as before, as policies as CBAM are more on a pilot phase and on ongoing waves, etc. So there's always room to impact and advocate for change in that. I think we have room for one last question, if anyone.
Hello, everyone. Thank you for your insight. I'm Carmen Virasoro from Argentina, and my question would be for UNCTAD mainly. It's that environmental requirements in the world trade, mainly related to certification, deforestation, produce, and such, are bringing an onus to all our value chain of the primary products such as cereal, such as beef, and not, even if they are working collaboratively among the chambers and associations, this capacity building phase will need to be supported. What are your views vis-a-vis that point? Because I know UNCTAD in capacity building has always been, has found in UNCTAD a great ally for us in developing countries. Thank you.
Thank you very much for great questions. Yes, indeed, there has been an increase in the trade of sustainable and environmental friendly products, and associated with that are so-called voluntary sustainability standards. This is really the case of the idea is great and the implementation is lousy. Because let's talk about the organic standards, for example. Of course, people actually want to eat organic food, and then if you do the organic production, it's good for the soil. However, the problem is the cost of certification. A lot of producers in developing countries in Kenya, look at Kenya and then even Asia, Latin America as well, they have started, because they are de facto organic anyway. They produce their own products, and then they have to go through the series of certification processes, which costs a lot. I was working in Laos, in Asia, and on the product of coffee and tea. They said all these established producers, which are still continuing producing agriculture in terms of organic way, but they stopped applying for the certificate, organic certificate, because even if there is a slight margin that they get higher in terms of their price because of the certification, it doesn't pay for the cost. So this is the question of if we really want to go for the green products, let's talk about the fair distribution of cost across the value chains. Because the 20%, 30% margin that they get at the end, like the retailer on the agriculture products, they don't go to the producers. Even like a fair trade is doing relatively better. But that's the challenge, and we are working on it from the biotrade, the principles, and also the green and sustainable trade strategies, that how we can actually manage and raise awareness of the fairer distribution of the costs across the value chain. And thank you very much for the question.
Thank you all. If I have to summarize the session today, we talked a lot about why trade is important. Michał and Samaila, you told us the trade increasing the affordability of products and services. It's a powerful policy tool, and it can speed up the impact as much as we want. You also talk about the risks of such a trade policy, that inherently trade has carbon footprint, and the trade policy could be distorting if not used in a good way. We talked a lot about the challenges. Both John and Farmida have given us a long list of challenges. I've noted 9 of them, and I'm sure there are many more. One key outcome from that is John's statement of going by waves and learning by doing to addressing those challenges. I think that is a key takeaway for me. Barry, when you talked about solutions, you talked about 4 key solutions: sustainable finance, sustainable guarantees, sustainable sourcing, and working capital. You also mentioned key enablers in order to ensure those solutions. You talked about the data, the collaboration and the ecosystem and the incentives. John, John mentioned actually the move, the speed that those solutions could be deployed is the speed of trust. So as much as trust we have in the collaboration and the ecosystem, as much as we can move in the solution. And then maybe that this going deeper on the ecosystem and the collaboration that financial institutions cannot do on their own, and every actor of the ecosystem has a role to play, whether NGOs, corporate, government, or banks. Thank you also for engaging in the conversation. I think that would be it for today. Particular thanks to the panelists. So thank you everyone for being here today.
Hello, everyone. I'm sure you're very eager to get started, so we're going to do that in the next minute. Thank you so much for being here. We're fully aware that you have so many options, so it's great energy that we can feel already, right? My name is Monica Araya. I'll be moderating this session. I'm Executive Director at the European Climate Foundation, and I'm from Costa Rica. Our colleagues here do not need introductions, but I'm just going to do that before we hear from the ministers that are visiting us this afternoon. We are very honored to have a session that is going to talk about ministers and their leadership and collective action. But before we hear from them, I really would like to introduce the people who are with us. So we have a world leader on trade, development, needs no introduction, a person that I have admired many years, Dr. Gnosi Okonjo-Iweala. She's, of course, the Director General at the WTO. We were going to have Rebecca Greenspan, who is not here, so we will hear a statement later on from a representative from UNCTAD. We have Pamela Coke-Hamilton, Executive Director at ITC. And we have Andrew Wilson, who is with us, representing ICC, because John Denton couldn't come, so thank you so much for being here. We will have Selwyn Hart, who also doesn't need introduction. He's going to be with us at the very end. And now we are going to go back to the reason why we're here, which is to hear about ministerial leadership, collective action for trade and climate change. We are going to hear a perspective from the Gambia. We are going to hear from Minister Rohi John Manjang, and we are going to hear a perspective later from Colombia and then from Barbados. And what we're going to do is to invite each speaker to come to the podium, and it's not a speech, it's a conversation we're going to have. So let me just ask a framing question for you. In your view, how can trade policy contribute to ensuring greater environmental sustainability? And how can trade help you in your country meet environmental and climate objectives in particular? The floor is yours.
Good afternoon to you all. I'm happy to join this important high-powered experience group to share the Gambia experience in terms of the climate change and our collaboration with the trade industry and the trade ministry in specific for the Gambia. Yesterday I was here too, and I did a small briefing on this on my own to mention that the Gambia's NDC 2023-2027 is green recovery focus, clearly to indicate that nothing has to be done that is not climate friendly when it comes to our national plans for the year 2023 to 2027. The Trade Ministry, we have a target to create jobs of 150,000 for the next terms of the presidency. Clear to indicate that these jobs, of course, by going by the NDC, must be climate friendly. They need to be green jobs. So creating the green jobs, the Ministry of Trade alone cannot. These jobs needs to be created in collaboration with other ministries, fisheries in particular, agriculture, and also the entire sectors. So important to know that the minister who is the Minister of Trade must recognize that all these jobs that he intends to create and collaborate with other sectors must be green jobs. And Gambia has already submitted their NDC too. Happy to again, and I will continue to make this pronouncement. The NDC is very ambitious and it has been quantified. Yes, we have the conditional and unconditional targets to meet, but the key areas is energy, agriculture, transport, land use, climate change, forestry, and also waste management. The Minister of Trade needs to work on his footing to make sure that the 150 jobs not only being climate friendly, but works towards the target as per our NDC. Why specifically as the climate change minister, he is one of my closest partners. Because whatever we need to do in terms of technology transfer, he is in the discussions. When we discuss about policies again, the Minister of Trade is also in the discussions. Because he needs to make sure that he taps on the potentials of the youths in changing the forefront of what we need to do in that transition to clean energy, clean agriculture, the infrastructure, the transport, and as well on waste management. So the Gambia is already taking the lead. We cannot leave trade aside. And knowing fully well that the way the heat is increasing, we've seen already countries putting in at least regulation to say that at a certain point in time, nobody is allowed to walk outside. Do we want to wait the entire world to heat before we all run into the houses and not to do job? Climate change is going to affect the productivity of every sector, especially the trade sector. So therefore, it's important that we understand that cooling this environment or cooling the universe is our responsibility to make sure that we maintain our potentials in serving the universe. And that is to say, Gambia is having the high potential when it comes to agriculture. We have a very rich land, aerobic land for agriculture. And this is where the Minister of Trade needs to partner and get young people to engage and also the partnership. We have a policy foresight that we need to induce private sector partnership. It has been long overdue that to inform us that our economy cannot only be managed and designed by only the local resources or even on donor focus. We need to bring in the private sector. And bringing the private sector is very important that the private sector cannot do it. They have to work with the local citizens. And working with the local citizens, the Minister of Trade is the center of all this. He seems to be the most important minister because we cannot do with our young people without the Minister of Trade getting in the center. Youth employment is not only a channel to achieving our climate goals, but it's also even the stability. When young people are not employed, when young people don't have the right skills and capabilities, they turn to be a nuisance to the environment. So we need to make sure that we put them on the right track. That is why we have the policy of creating 150,000 jobs in the year of this term of the presidency. Those jobs we cannot compromise as per our national NDC that is already there, green recovery. They must be in line with environment and climate change policies. Thank you.
Yes, please. Thank you. And the theme this week is the theme in a very positive way is about the linkages between trade and climate, and is very inspiring to see your clarity because it's where we need to go. And I hope that your intervention can be shared many times with many others because that is the direction of travel. And now we're going to go from the Gambia to Colombia, and we are going to hear from Minister Germán Umaña Mendoza. So we'll continue with the same theme. How can we use trade policy to advance climate objectives?
Muchas gracias. Buenas tardes a todos.
Thank you, and good afternoon to everybody.
Bueno, para nosotros la participación en esta COP28, atada a la Ministerial del 2024 de la OMC, se vuelve definitivo.
For us, this COP this year and the linkage with the next Ministerial Conference of the WTO next year is now definitive.
Los principios fundamentales de la COP28 tienen que ver con lo ambiental, con lo social, con la gobernanza, con la auditoría y con la medición.
The principles of the COP28 are related to verification, ambition, doing more than what you did before, and implementation.
Entonces estamos hablando en lo ambiental que nuestros países, como la expositora anterior, somos los grandes oferentes de la biodiversidad, de los conocimientos tradicionales, de la pluricultura, del agua, del viento y del necesario cambio en la reindustrialización.
So, as my previous speaker said, our countries, from developing countries, are the protectors and the purveyors of biodiversity, of water, of traditional knowledge, of indigenous knowledge, and innovation.
Esa oferta se manifiesta en muchas necesidades en cuanto a la integración nacional y latinoamericana y también en la participación de las comunidades, tanto afroamericanas como campesinas, como indígenas, que son los cuidadores de esa biodiversidad.
And this involves cooperation regionally in Latin America, especially putting in front indigenous peoples and their integration, because they are the ones protecting this biodiversity.
Los países desarrollados y otros países tienen más dinero, pero menos biodiversidad.
Developed countries and other countries might have more money and resources, but less biodiversity.
Por eso es indudable que la gobernanza será una nueva gobernanza en materia de tratamiento a las inversiones. Seremos socios.
This is why international leadership, cooperation, and governing has to be more than just simple leadership, but collective leadership, and to be real partners in this endeavor.
Somos los que dotaremos al mundo de cada vez menos carbono y necesitamos de las inversiones, la tecnología y también la cooperación para poder que ustedes, los países desarrollados, aprovechen nuestros pulmones y nuestra naturaleza.
We are the ones that are going to push for less carbon emissions while developing, and we need your technology, your investment from developed economies, because we are the ones holding the breath or the air of the world.
Por eso las formas de financiamiento son también un arreglo institucional nuevo. Por una parte, históricamente hemos depredado en el mundo en la Amazonía.
And we need a new global framework for this, historically with being destroying the Amazon.
Muchos culpables, incluidos nosotros, pero no únicos.
There are many at fault at this, including ourselves, but not only ourselves.
Por lo tanto, esa conservación y esa reforestación tendrá que ser apoyada con los bonos azules, los bonos verdes, los bonos sociales, con características claras para responder a esa preservación.
So this reforestation, avoiding deforestation, will require credits, the blue credits, the green credits, the social credits to finance this change.
El papel de nuestras comunidades y nuestras organizaciones será contribuir a mejorar la huella de carbono alrededor de la Amazonía o alrededor de nuestros parques naturales o en los procesos de reindustrialización.
And the task for global organizations will be to help this reforestation, protection of the Amazon and other forests with reindustrialization.
Y para eso necesitaremos financiamiento en condiciones adecuadas, no favorables.
And this, we will need financing with adequate financing conditions, not favorable financing conditions.
Y instituciones importantes de fondos de capital como One Amazon, por ejemplo,
And important institutions for financing as
están sirviendo de vehículo importante para hacer un fondo multilateral de garantías para los bonos verdes.
And the Fund for the Amazon, which is providing important financing mechanisms for this activity.
Y la atracción de la inversión extranjera directa será fundamental, pero como dije, con un nuevo arreglo institucional en financiamiento e inversiones.
And attracting foreign direct investment will be key, but again, with a new framework, a new regulatory framework for these investments.
Y se preguntarán ustedes qué tiene que ver esto con la OMC.
And you might ask what all of this has to do up with the WTO.
Todo.
Everything.
Todo porque está ocurriendo exactamente lo contrario.
Everything, because what we are having now is the opposite.
El incremento de los subsidios bilateralmente por parte de la China, por parte de los Estados Unidos de Norteamérica, por parte de la Unión Europea.
More and more subsidies, bilateral subsidies, and subsidies, direct subsidies from China, United States, the EU.
Por ejemplo, la directora de la OMC lo conoce bien porque sus economistas le han hecho buenos trabajos al respecto.
Dr. Ngozi knows that well because the economists at the WTO have done a very good job in it.
El manejar una alternativa que compartimos con la Unión Europea, todos creemos en la mejora del desarrollo sostenible.
We all share the EU's approach and vision of sustainable development and sustainable management.
Creemos que no debe haber exportaciones con contenido de carbono.
We don't want to export or have exports with high carbon content.
Pero creemos que es para todos y no solo para las exportaciones, sino para las producciones internas.
But that's for everybody, not only for exports, but also domestic production.
Creemos en los programas de la granja a la mesa.
We believe in the Farm to Fork programs.
Pero para la adecuación después de 50 años de recibir los agroquímicos.
But after receiving for 50 years agrochemicals,
creemos en la reforestación y en los programas de transición.
We believe in reforestation programs and sustainable agriculture.
Pero entonces creemos en la transición, en el tiempo, en el desarrollo tecnológico y en la cooperación y no en la imposición.
So we believe in a transition with support towards sustainable production, not imposition of requirements.
Y estos son los temas que deberían, desafortunadamente no son así, estar tratándose en la Ministerial del 2024.
And these are the topics that should be treated and dealt with at the Ministerial Conference next year in 2024.
Sumado a la soberanía alimentaria, no a la seguridad alimentaria.
Linked to food sovereignty, not food security.
En donde también seremos los grandes exportadores en esta materia.
In which we will also be big exporters and contributors in this topic.
Entonces, al primer arreglo institucional de la COP28.
So the first institutional outcome for COP28.
Debería sumarse el segundo arreglo institucional de la OMC del 2024.
We should have also an outcome in 2024 at the WTO.
Donde los objetivos del desarrollo del milenio, los objetivos de desarrollo sostenible, perdón.
Where the sustainable development goals.
Tengan una coherencia con el multilateralismo de la Organización Mundial del Comercio.
Are coherent to the multilateralism that the WTO protects.
Como vamos, es a la crisis del multilateralismo.
As we are going, what we have now is a multilateralism crisis.
Estamos volviendo a 1943.
We are coming back to 1943.
Y estamos cayendo en una trampa bilateral.
And we are going towards, again, bilateral risks, troubles.
Colombia cree en el multilateralismo.
Colombia believes in multilateralism.
Apoya el multilateralismo.
Support multilateralism.
Y apoya los nuevos arreglos institucionales.
And supports new agreements.
Que hagan coherente el desarrollo sostenible con las políticas de comercio, inversión y propiedad intelectual.
That make a coherent development policies, trade policies, and intellectual property policies.
Pero las modificaciones son necesarias para no caer en la trampa imperdonable del ejercicio unilateral de políticas que pongan en riesgo la Organización Mundial del Comercio.
But we really need to avoid unilateral measures that will lead us to the crisis of bilateral protectionism and crisis of multilateralism.
Es angustioso ver que no se están tratando los temas fundamentales.
It's hard to see that the fundamental topics are not being dealt with.
Y esta reunión, que espero sea positiva en la COP28, porque hasta ahora los compromisos no se han cumplido,
And we really, really hope that COP28 is positive because the commitments we've seen have not been complied with.
se manifieste en el éxito de la Ministerial del 2024 de la OMC, donde tampoco estamos cumpliendo con los compromisos en la actualidad.
That this leads to a successful MC13 where we have respect to the commitments, which unfortunately we are not seeing now.
Muchas gracias.
Thank you so much.
Thank you so much. So thank you, Minister, for such a clear message. And one thing I just would like to emphasize is that Colombia has been very good at mixing, in the Gambia as well, mixing environment and climate from a biodiversity perspective, which is often missing in Europe because that is not often part of the conversation. The conversation on climate tends to be around energy systems and technology. So this perspective around biodiversity is very important. Now, we heard from a Minister of Environment from the Gambia. We just heard from a Minister of Trade from Colombia. And now we're going to hear from a ministry, the perspective from a Ministry of Foreign Affairs. So that's great job from the WTO team to get this combination. It's very rare that we have 3 ministries in one panel. That is really, really good news so that we can hear not only from different countries, but from different portfolios. So we are going to now go to Barbados, and we are going to hear from the Minister of Foreign Affairs and Foreign Trade from Barbados, the Honorable Kerry Simons. The floor is yours. Thank you for being here.
Thank you very much for inviting me. I perhaps should begin by saying to you that the perspective from Barbados, you might appreciate, is one of an acute sense of urgency. And if I just give everybody a little bit of context, I think that the whole world now understands the importance of the climate crisis that we are facing. But equally, for us in the Caribbean, and I'm going to make bold to speak for the Caribbean here, not just Barbados, we sit on the forefront in many, many ways. And I think you all would have recognized the geographic vulnerability which is inherent for us. Every time we have a Category 5 hurricane that passes through the Caribbean region, there is an existential threat that is presented by that climatic reality. And it is true to say that there have been occasions where in the space of 5 or 6 hours, the entire GDP of a country has been set back by over 200%. In some of our islands, they've been rendered completely uninhabitable. In Barbados's case, that issue is compounded, and quite frankly, it is compounded across the region by virtue of the fact that we have had substantial instances of drought. For the first 5 months of this year, Barbados would have seen 53% less rainfall than our 30-year average going back the last 30 years. So there are many instances where we are pointing to the drought, we point to the beginning of desertification, we point to tourism-dependent economies, seeing beaches disappear and coral reefs disappear. So it is in many ways an existential threat. And therefore, the sense of urgency requires us to speak very candidly to some issues, Dr. Ngozi. First of all, I think we can or should be able to agree that if we're going to talk about reforming the multilateral system, the Bretton Woods system, that we can't leave out the World Trade Organization either. And there are some aspects of its operations which, quite frankly, need to be confronted squarely. I don't know how we can go on for much longer without having an appellate structure in place, which is absolutely fundamental if small and micro states such as ours are to be able to sit at a table as equals with the large powers in the world. Then there's the very taxing difficulty of unilateralism within the context of the discussion of multilateralism. And for us, we have watched the carbon border, CBAM, carbon border adjustment mechanism, take place with Europe, and without any substantial consultation with those of us on the receiving end. There are some countries in CARICOM who are cement producers. Barbados is one. There are some countries in CARICOM who are steel producers, ammonia producers. Trinidad is one. And for there to be a sense of unilateralism, which says that there will in fact be a tax implemented against those imports on the basis of a determination made by Europe with respect to whether or not there is a sufficient carbon or decarbonization of the product, creates a tremendous amount of difficulty. And we have, while we understand and appreciate, and quite frankly, I respect Europe's effort to be prescriptive and to take environmental issues by the scruff of the neck, we find it difficult that this can happen or can be allowed to happen without adequate participation in the process by small states such as ours. And quite frankly, Dr. Ngozi, I feel that I should also say allowing it to happen outside of the scope of the World Trade Organization's mission as we understand it. Now, I'm told that it is WTO compatible, but I believe that it's true to say that we spent many, many years negotiating at the WTO level for a simple thing called special and differential treatment. And the recognition of that ties squarely into the climate accepted issues coming out of COP last year, where we agreed that there should be common but differentiated responsibility. Different language, perhaps, climate and trade, but saying essentially the same thing, and philosophically taking us back to the ancient Aristotelian principle. As between equals, there is going to be equality. Where you do not have equals, then there should be proportionality. And if we can accept that basic principle, which has guided us for hundreds of years, then we should also be equally able, I think, to accept that the imposition of this plan of action, this course of action by the European Union, creates tremendous difficulties for the LDCs, first of all, and secondly, for those of us who are small island developing states, not necessarily in the LDCs. We know from our own relationship with Europe that we created an economic partnership agreement in which there was another underlying precept of special and differential treatment manifesting itself in the form of an asymmetrical application, which simply meant that for us to be able to meet Europe as equals at the table, we needed to have a longer period of time to make the adjustments so that we implemented our obligations over the course of an 8 to 10 year period in some cases, and as long as 20 years in others. I'm not going to be for one moment suggesting to you that we have 20 years to treat major environmental issues. But I will suggest to you that the small amount of exports from Caribbean countries to the European Union is so minuscule that it cannot, on one hand, either distort trade, or on the other hand, fundamentally come close to the scale of global pollution and contamination of our environment that has been practiced by large powers such as China and the United States of America and India, et cetera, whom perhaps the European Union may be targeting, but they should be treated as the equals. And that it come into place to affect everyone at one stage does not, in our judgment, seem to make an abundance of good sense. Above and beyond that, I think that the conversations we've been having so far need for us to also speak to some aspects of the discussion or the process that we've been too silent on for too long. While, Dr. Ngozi, we would have, and I think I saw you in Brussels in July, and we made historic steps, small island state like St. Vincent and the Grenadines, partnering with the chairing the CLAP process, which is Central American, Latin America, Caribbean countries, and the European Union meeting in Brussels. And we agreed there on the fundamentals of the reforms that we need to make in terms of our commitments to advance the decarbonization of our economies. At the same time as we were doing that, financial regulators were meeting in the United States. And out of that comes the next stage of Basel, called the Basel Exit Strategy. And this exit strategy will have us accept that there must be stricter measures applied with respect to loans being offered by investment banks, because they must be more careful about risks that are in endeavors that are unproven and uncertain. Well, that is precisely what renewable energy is. That is what the greening of our global economy is about. But if on one hand the regulators are going to say that the risk for this essential journey is too great, and therefore access to capital must be not only guarded, but consequentially more difficult to access. And there are those who predict that out of Basel III, this new step will be 15 to 20% increases in the cost of capital. But that is exactly what we do not need. And again, it is exactly what small island states who are struggling to find the resources, and for many of us, I should add, indebted states, struggling to make our ends meet in the context of adaptation, which is fundamental. Well, if we cannot meet the cost of adaptation, and we can't do it out of the public purse because we're already strapped financially there. So we must find a way of going into the international market space in order to raise this money. But if raising the money is going to be made more difficult, then the asymmetry in the relationship becomes more acute. And that is exactly where we do not wish to go. So that it is an aspect of the conversation that we've not really been having, but which I think we have to have, because unless we take our regulators, we're not going to get there at the speed with which we need to. I would love to go on, but time will not allow me. But I want to thank you for being able to participate.
Yes.
No problem. The minister is going to have to go. Yes. So thank you so much. We wish we could have more time, but it's always the case that we run out of time. And since you mentioned the EU, we are we are fortunate to have Dora Correa from the European Commission. Dora, I understand you have a message for us, and you're going to speak on behalf of the Commissioner for Trade of the European Union.
Thank you indeed, and good afternoon to you all, Excellencies, ladies and gentlemen. Let me start by thanking the co-hosts of the Trade House for welcoming the Coalition of Trade Ministers for Climate to this event. We count the WTO, the ITC, the UNCTAD, and the ICC, along with the Office of the UN Secretariat's Special Representative on Climate, as friends of the coalition. The message that I carry from the Executive Vice President Dombrovskis is also on why himself and the co-leads from Ecuador, Kenya, and New Zealand started the coalition. It reflects the co-leads' shared belief that trade and trade policy can and must do more to tackle the global climate crisis. The coalition is an inclusive, high-level political dialogue that strengthens global collaboration on trade, climate, and environmental sustainability. What is remarkable and impressive about the coalition is its diversity. We have 58 ministers from all the regions in the world, from countries with different levels of development and also with different degrees of climate vulnerabilities. The full list is in this little brochure that you have behind you, but I'm very happy to say that the Gambia, Colombia, and Barbados are indeed part of the coalition. The climate crisis compels us to take urgent action to align the global trading system with our net zero commitments, to support climate resilient development and address adaptation challenges and losses linked to climate impact. Now, as you have heard from previous speakers, different countries have different paths to reach these objectives. But we do, however, also have common goals. And in the coalition, we want to find ways to help the transition to net zero globally. And we firmly believe that trade policy has an important role to play in this. Trade can drive innovation, can create market access opportunities for environmental goods, services, and facilitate the use and flow of clean technologies. The coalition is there to help promote this positive contribution that trade can make to the fight against climate change. And this is one of the reasons we are here today. The other reason is the need to break down silos. If we want a truly global response to climate change, we need to work together, and not only across countries, but also across policy communities. We need to engage at national level and at international level with fellow ministers working on climate, environment, finance, and development, among others. We also need to work with businesses and with NGOs. We need to do better in terms of joining the dots and having a cross-fertilization of ideas. The COP and its first trade day is, of course, the perfect place to start this joint work. And yesterday, the coalition hosted a roundtable to collect perspectives from global climate community on the priorities for cooperation between trade ministers. Some key takeaways, very shortly, were that there was a broad support for the coalition and for the role that trade has to play in bringing about the net zero transition. Also, there was a strong plea to take into account specifically the situation of developing countries and the situation of the most vulnerable countries to climate change. Echoing the point made by the Colombian minister, a third takeaway was the need to mobilize sustainable finance and investments to support the green transition. And finally, the last takeaway is that climate and sustainable development needs to be an integral part of conversations on trade at multilateral level. The participation of the coalition for the first time in COP28 today, alongside the global climate community, demonstrates our commitment to cooperate in pursuit of a positive trade agenda and a positive contribution to the climate agenda. But we don't stop here. Next month, the Coalition of Trade Ministers will host a dialogue with climate and finance ministers to identify areas for future cooperation. And the issues of sustainable financing that the previous speaker, Honourable Minister, you were raising, will certainly be part of that conversation. We want these three communities, trade, climate, finance, to work together to identify the best approach to bring together these issues. This future cooperation could focus, for example, on identifying goods, services, and new technologies for climate adaptation and mitigation to help us reach our ambitious Paris targets. Only by uniting forces across different parts of government, within and beyond our countries, can we leverage expertise and resources to develop comprehensive trade-related strategies for mitigating and addressing climate change impacts. I would like to close by thanking once again our co-hosts for helping us to put into action our priority of building alliances and partnerships. Today, with this first trade thematic day in COP, and here in the Trade House, we all make a first step towards changing the face of trade policy in the climate community. It is our opportunity to show that trade can be part of the solution. Many thanks for your attention.
Thank you, Laura. So now we're going to switch to our distinguished panelists. It's not going to be a full panel because we won't have time, and I know that Selwyn is here, so whenever he comes, he energizes the room, so we look forward to your intervention. And I take from the previous conversation there are still many topics that we need to address, safe places to have difficult conversations, and we will have time next year. So, Dr. Ngozi, you are so busy. I'm sure you have lots to say about what you just heard. One entry point could be the next ministerial. You're going to be back here in this part of the world in February. But I don't want to limit your intervention to that question. So, of course, you will take it to wherever place you would like to, because I'm sure we heard things that will require a lot of time. So we're curious to hear your views.
Well, is it working? Hello? Thank you very much, and I recognize we're running out of time, so I'm just going to sit here. I'm not going to the podium and, and make a few remarks. I just want to thank my fellow panelists for coming, for their patience, and of course the honorable ministers and the advisor to the Secretary General, all the people who have taken the trouble to come here this afternoon. Let me make one or two remarks, of course, linked to the ministerial, but also in a way responding to what the ministers said. First, I want to thank the Coalition of Trade Ministers for Climate for joining us here today, and to say that we've heard them. And what we want to do is what we see happening today. We want to put trade at the center of the discussion on climate. As I've told everyone 2 COPs ago at COP26, I found that trade was not even being talked about. Everybody takes trade for granted. And the fact that you cannot really achieve net zero by 2050 without trade is something that was not being discussed. In fact, when I said to a former UNFCCC executive that, look, you can't make net zero without trade, she looked at me startled and said that was the first time she had heard that. All they think about trade is it's part of the problem, not part of the solution. So the discussion we want to have here at this COP, we've come a long way, and we thank the UAE Presidency and for this trade day. We are competing because today is also Finance Day. But I think we're not doing badly. We have our trade ministers for climate, and what we've done at the WTO is try to put forward 10 measures that ministers can adopt, that countries can adopt into their nationally determined contributions or national action plans that will help them accelerate the movement to net zero. Why? We are not moving fast enough. That's really the point, and we still have a chance. So we should all be thinking of what more can we do to make this happen. I also want to say how grateful I am to have this trade house. I want to thank my sister, Pamela, my younger sister, Rebecca Greenspan, the ICC, for all of us coming together, and of course our teams that work so hard to make this happen. Now let me link one or two of the measures here because the ministers raised them as well. There are some things that we can do to accelerate. I'll mention one very quickly, is public procurement. I always start with that because ministers, you all procure. We have a government procurement agreement. Do you know that public procurement in the world is worth $13 trillion? And that government procurement leads to a 15% of greenhouse gas emissions? So right there, we have a powerful instrument where governments can say, if we are going to run a tender, it has to be a green tender. There have to be certain criteria met by those who are going to get this contract from us, so that we can use this process to green the environment and not to emit greenhouse gases. So that's one very easy thing. It's not rocket science. Some governments are already doing it, but we want more. And I'd like to see when we get to MC13 that these measures that we put together, that our ministers are paying attention and that they're actually adopting them as much as they possibly can. I'll mention another quick one is tariffs, import tariffs. Many of you may not know, but when you look at the import tariff regimes in many of our countries, you see we favor fossil fuels, fossil fuel-driven products. I can say my country will import second-hand cars, which you know are quite polluting, isn't it? But we do it so we can give young people and those in lower middle class a chance to own a vehicle because they need it. It's an aspiration. But at the same time, our import tariffs on those are lower than those on, let's say, clean energy vehicles, CVs, or even hybrids. And I only found this out when I got a hybrid myself, when I was finance minister. And I said, why is this so expensive? And then you go to look. So again, not rocket science. But we found that average tariffs for renewables, energy products in developing countries are about 7.3%. For developed countries, it's 1.4%. And then, you know, you look at the differences between fossil fuels. So there are these anomalies that we can adopt if we really want to make renewables part of our way of getting to net zero. Look, let me also quickly touch on one or two things the ministers raised. You know, there's a great deal of angst on protectionism and the fact that some of the measures that some of our members are adopting to get to net zero may be seen as protectionist by other members. We have multiple approaches to carbon pricing. And some of these approaches are very difficult for businesses and for developing countries to understand and to implement. So they've raised questions legitimately. On CBAM, for instance, what I want to say is, look, WTO supports actions to net zero, but there must be actions that don't militate against the competitiveness of other countries. What we've done is we've spoken to the EU. They are very constructive. They are actually coming on the 18th of December to engage with developing country members, to listen to their concerns on these issues, and to answer questions and explain what they are trying to do. Ditto for deforestation. So these concerns are there, they must be addressed, and we provide a forum, and I'm happy to see a constructive approach by the EU towards trying to deal with. So we don't have a situation in which people feel they are protectionist measures. By the way, we are working on this carbon pricing. Now we've decided to try and harmonize approaches. There's a task force that we put up that brings together international organizations, the IMF, the IMF, the World Bank, the WTO, UNCTAD. All of us are involved in trying to see how this can be made better. And finally, let me just say that one very easy one for all of us that we'd like to monitor and see how we're doing at MC13 is implementation of our trade facilitation agreement. We found that the logistics of trade, you know, when you have customs procedures, border procedures, you have ships idling, you know, for days, you know, because customs clearance procedures. We just had an earlier panel today with CEOs of shipping companies, Maersk, DP World, and so on. They were saying, look, there are so many regulations, so many procedures, and we have ships waiting. Why don't we all digitize and make these things easier? Let's implement the WTO Trade Facilitation Agreement, and then we will find that things are moving in the right direction. So lots of things to do. We're looking forward to MC13 to see that we're on the right road. We can bring trade and environment and climate together. Thank you.
Thank you so much. Now we're going to talk briefly about small businesses. And Pamela, your organization has been working extensively with small and medium enterprises. What would be the dimension that you would like to add to this conversation based on what you've heard?
Sure, let me be quick. Thank you so much. I really want to say that this trade house idea has been something that we're really happy about because we've managed to bring together the three institutions and ICC as the primary business institution in a collaborative effort to showcase why trade is important. For ITC, we do what I call the translation of trade. So we translate all the surround sound and the words into how does it really impact, especially small businesses. Small businesses are 90% of all businesses in the world. And one of the things that we've also learned is that virtually 80% of the supply chain of the bigger businesses are small businesses. So if we don't address the issues that affect small businesses, we're really just talking in circles because nothing is going to change. And so the lessons that we've learned are, first of all, information, data gathering is key. 70% of the companies, SMEs in Africa, sub-Saharan Africa especially, have said that they know they need to make the change. They know that it's necessary, but they don't know how to do it. 40% of them, less than 40%, are actually engaged in it. Those who do it have said that it works and it's good for us, but how do we do it? So as ITC, we have been working with these SMEs to undertake things like climate smart agriculture, looking at de-risking their ability to attract investment, enabling them to get matching grants, looking at how do we help them on the climate competitiveness assessment tool, how do we work with them on the tool that we're going to launch next week. Is it next week or this week? Anyway, we're launching a tool. You know, yes, I don't even know what day it is. The Green Performance Toolkit. We also have one of the largest standards map worldwide, over 300 standards listed. And so what we do is we work with SMEs to be able to function and understand what's required, how to meet these obligations, and to move forward. The second thing that we've learned is the finance issue. Every single time we have a conversation, access to finance is the single largest obstacle to making this transition. And we have to find a way to address that. Because while there is willingness, you know, we have a saying in the Caribbean, you know, the spirit is willing, but the flesh is weak. If we are not able to address that access to finance, we will lose so much in terms of business viability, but also in terms of simply making the transition. As I listened to the Minister of Gambia, Minister from Barbados, we know what developing countries face on a daily basis. Add to that what SMEs face in access to finance. And so one of the instruments we're looking at is a transition fund. And it's also related to the EUDR regulations. The fact that there needs to be a fund that allows us to in a way, underwrite the change that needs to happen. There's a recognition that the change needs to happen. There's an understanding that they want to make it happen. But traceability is costly. The technology required to prove it is costly. The ability to put it in place and the skill sets needed is costly. So everything is going to take funding. How do we work with the funding agencies, with the EU, everybody to make this happen? And I think that is also critical. The third thing that is important is advocacy. And the DG talked about it. Advocacy is critical because many of the governments themselves are not clear on how to help their own SMEs make that transition. Little things, as you said, the trade facilitation issues, the procurement issues. There are little things within. I'll give you an example from my own country. I had a minister discussion with my minister, and I was saying to him, well, why don't we go green? Why aren't we moving ahead and doing all of this? And he said to me, well, we have a unilateral agreement with the electricity company. I think Minister Simmons knows which one. The electricity company controls the grid. And because of the agreement that was negotiated eons ago, we are stuck. And so there are elements that we also have to begin to look at to force change in terms of even agreements that have been reached. So at the advocacy level with governments and also with business support organizations, that's very, let me stop. Okay, sorry.
So ironic that this is one of my favorite topics. Thank you for all the work. I have a tough job because I am told we have to leave around 4:15 period. And then we have Selwyn. So I am very sorry because no, we also want to hear, no worries, from UNCTAD and from ICC, but I just need to flag that we're going to have to finish on time. So our Rebecca Greenspan couldn't be with us, but fortunately we have a colleague from UNCTAD, and we're going to hear from you, and then we're going to hear from ICC.
Yes, unfortunately, SG Greenspan had to leave this afternoon to Geneva, so she asked me to deliver her message. Excellencies, the world is at the crossroads. We find ourselves at a critical juncture in the history of globalization and trade, a moment defined by geopolitical shifts, digitalization, and most importantly, the imperative to address climate change within our trade system. The urgency to reshape our trade practices in the face of these challenges cannot be overstated. This coalition of trade ministers on climate is a beacon of hope in these challenging times. This diverse coalition with members from G77, G7, small island development states, and beyond stands as a testament to our united front in the fight against climate change. We must recalibrate what we trade, how we trade, and why we trade. This means prioritizing commodities critical to the renewable energy revolution, such as lithium, cobalt, and nickel, over traditional fossil fuels, and doing so in a way that can promote structural transformation in commodity-dependent developing countries, as we discussed at the opening panel of the Trade Day this morning. This involves shifting towards biodiversity-friendly and environmentally preferable goods and services, championed through UNCTAD's biotrade principles and criteria, and our great green export reviews, while at the same time shifting out of climate-unfriendly goods, notably plastics, which pose a staggering environmental and economic costs to our oceans. We need to move with speed towards non-plastic material substitutes. At the same time, the need to decarbonize shipping contributor to at least
develop, and also to address many of the issues that Pamela mentioned. You know, how do you, the scope 1 and scope 2 emissions of SMEs in developing countries, or the scope 3 emissions of their major trading partners. So we really need to build that capacity at the national level. But I have just a few asks for ministers. At the national level, your roles are absolutely clear. We also need your support at the international level. We need an open and fair trading system that facilitates the trade in many of the climate solutions, be it on renewable energy or solutions to support adaptation and renewable energy. And we know that there are difficulties, the geopolitical tensions, but we need the global trading system to remain open. The acceleration that is needed, it needs to be done at a pace and scale that is absolutely unprecedented. If we are to triple renewable energy, this is one of the goals that we are currently looking at. It will require nimble supply chains for all of the critical raw materials. They need to increase by about, my colleagues are here, 30 for some of these critical minerals. They need to increase by 30-fold, right? So that absolutely requires open and transparent markets. We need to minimize as far as possible trade tensions between the major powers so that these critical energy transition minerals and products can move across markets at the pace and scale that the transition demands. And for some of them, and this is one of the reasons why, and I announced it earlier, but the Secretary General announced it earlier this week, he is creating a panel, bringing all of the expertise of the UN system together, a panel on the energy transition minerals. And this panel has a very clear mandate. It really is intended to bring countries of extraction and production together with countries of consumption, along with civil society and with some of the key international organizations together to address some of the major challenges with securing resilient supply chains for the critical energy transitions, but more importantly, to ensure we don't repeat the mistakes of the past as it relates to developing countries and communities attached to these products not benefiting and reaping benefits. So benefit sharing will be a critical component of this work. So finally, as Dr. Ngozi said, there are some issues that need to be addressed. We need harmonized approaches to carbon pricing. I believe that carbon pricing is the most effective tool to help countries to reduce emissions. But it must be fair, applied fairly, and it must be applied effectively. So how can developing countries be supported to ensure that they have the tools at their disposal to set a fair carbon price, and that they are not left behind as the rest of the world implements carbon pricing? And finally, addressing aviation and shipping are absolutely critical to trade, but they're also critical to the transition to net zero. And at ICAO and at the IMO, they have agreed on aspirational goals and targets to achieve net zero by 2050. Our trade ministers, I'm not sure if Minister Simmons is at the table with his international transport minister, or you probably hold both portfolios. But ministers of trade need to be part of that conversation. And in addition to decarbonization, a critical aspect of that conversation is on the use of innovative finance. How can innovative finance be leveraged from the trade, from aviation and shipping to assist in the transition to net zero, both on the adaptation, loss and damage, and mitigation front? So these are some of the issues that hopefully will be taken up by all of you. We need your help and support at domestic level, but equally important, we also need you to be more engaged at the international levels. So thank you so much, colleagues.
Thank you so much. Yes. Great. Yeah, I could tell you many stories about the old days in the negotiations. So I think it's fair to hear our colleague from ICC. Andrew Wilson is the Global Policy Director. Now, you accidentally ended up giving the final remarks of the event.
Closing remarks. That's what I'll tell my parents. Yes. I delivered closing remarks at a very important trade event. Well, thank you for this opportunity, and obviously we're delighted to co-host the Trade House together with the WTO, UNCTAD, and the ITC. And I will be very, very brief in the interests of everyone's time. From our perspective, it's great that we now have trade as part of the UNFCCC process, and I don't think we should underestimate the symbolism in that, or the goodwill that has been generated by many of the sessions over the past day. Our question would be, as business, where do we go next? What do we actually make of this? And I think MC13, which was cited by a number of the ministerial speakers, is an important staging point. So what can we get MC to deliver or catalyze coming out of the discussions in this space at COP? And for us, it's three simple things, and I apologize, they are quite basic. The first is, can we just stop allowing trade policy to act as a barrier to climate action? The WTO DG spoke, I think, very eloquently earlier about the issue of tariffs on environmental goods, on green goods and services, in fact. This is an issue which has been debated in the WTO now since 2001. Can we finally come out of MC13 with an action plan to conclude an agreement to remove tariffs and then to go one step further in the future in actually addressing technical barriers to trade? That would have an enormously tangible impact on the diffusion of clean technology and the affordability of the technologies needed to drive a net zero.
Good afternoon, everybody, and welcome to Trade House, which is a fantastic collaborative between the International Trade Center, the World Trade Organization, UNCTAD, and the International Chamber of Commerce. It's my great pleasure to welcome you all to this event on climate transition for SIDS, LDCs, and landlocked developing countries. And we'll be focusing today on the role of trade and small business. To kick us off today and introduce the event, it's my great privilege to introduce to you Pamela Coke-Hamilton, who is the Executive Director of the International Trade Center. Pamela, over to you. Yeah, sorry.
Good afternoon, everyone. Welcome to Trade House. Yay! Thank you so much for being here. For this panel, we want to put center stage those countries that are already facing some of the climate change's harshest impacts and whose very existence is threatened daily by natural disasters, from droughts and floods to hurricanes and cyclones. These are the world's least developed countries, landlocked developing countries, and small island developing states, and we cannot afford to continue failing them. I'm from, of course, a small island developing state in the Caribbean, and I've spent much of my career working to support my home region's small businesses as they show the world what they have to offer. From tourism to agriculture to creative industries, small businesses in countries like mine have shown that they can and do punch way above their weight. But the climate crisis is putting that at risk, and we will all be the poorer for it. And what we've seen is that climate change is particularly devastating for the small businesses who call SIDS, LDCs, and LLDCs home. Negotiators here in Dubai can and must hear from these small businesses and business support organizations about their experiences and their needs. That's why we have some of their representatives on this panel to tell you for themselves what they care about most from these climate talks, from the Loss and Damage Fund to the Santiago Network, and much more. Later on, we will hear from Sonia Paiva from the Eswatini's Women Farmers Organization, which is part of our SME delegation here at COP28. As we look ahead to next year, ITC will continue to increase our focus on LLDCs and SIDS. And I'm so glad to have my good friend, Honorable Undersecretary General Rabab Fatima, here with us today. She has been the true champion for these groups of countries. USG, ITC looks forward to supporting you, both for the SIDS 4 conference in Antigua and Barbuda next May and the LLDC 3 conference taking place in Kigali in June. As it relates to SIDS 4 specifically, I have a recommendation for member states, and it is this. Prioritize and embed the role of trade and small businesses into the next 10-year program of action. Not only must we build the capacities of small businesses in SIDS to trade, but we must help them to accelerate climate actions through trade. We stand ready to support the host country, Antigua and Barbuda, UNOHRLS, and UNDESA in this process. Today, I'd like to highlight 3 key areas where concrete progress is vital for small businesses in these economies, and which can and must be addressed both at COP28 and at these upcoming meetings. The first is that small businesses need greater access to renewable energy. Small businesses want to make the switch to cleaner energy sources, but they need access. And with that access, they can achieve big results. Through our textiles, fiber, and clothing program, for example, we built the business case for climate change mitigation by focusing on enhanced resource efficiency and circularity. So far, by switching to cleaner, more efficient sources of energy, companies in North Africa and Central Asia were able to save 1.15 million kilowatt hours of electricity and contribute to 81,000 tons of CO2 reductions. This was achieved while increasing exports of value-added products by $82 million and creating 3,350 jobs. So it's an income climate smart approach, both helping in exports but also reducing the footprint on the countries. Second, we must do better on restoring biodiversity. Small businesses are part of the solution to protecting vital ecosystems, and the coming Montreal Global Biodiversity Framework has now given us the guidance for what needs to happen next. Livelihoods and preservation of biodiversity can and do go hand in hand. As our own work shows, for instance, at ITC, we've been establishing networks under our Alliances for Action program. In July this year, ITC's partnership with Jamaica's Alligator Head Foundation, who was part of our COP delegation last year, and the Coconut Industry Board, won the environmental category of the SIDS Partnership Awards. Through the partnership, we supported smallholder farmers and their communities in producing and commercializing diversified crops that boosted food security and biodiversity at the same time. This is how we deliver concrete results for SMEs and their communities. Third, we must accelerate the delivery of climate finance and the capacity to use it. We've already seen, both at the climate COPs and other international fora, calls to achieve the $100 billion climate finance goal and to develop a more ambitious and actionable goal for post-2025. We've also seen a growing public conversation around how to reform the global financial architecture to be more supportive of climate action. These are important efforts and long overdue. But any conversation on climate finance must also include the voices of small businesses and factor in what they need to make the most of the climate finance in practice, namely the training and capacity to develop a pipeline of viable investment-ready projects. This is why on Saturday I was delighted to sign a letter of intent with the Green Climate Fund on behalf of ITC, paving the way to developing a partnership that delivers climate finance. Before I close, I'd like to leave the image in your mind, this image in your mind. When the Paris Agreement was adopted in 2015, musicians Aaron Silk from Jamaica and Adrian Martinez from Belize came to the COP21 venue to share their song, 1.5 to Stay Alive, on behalf of the Caribbean and its small island developing states. So I want you to take a minute when you can to listen to it. The lyrics, 1.5, don't let it rise, may be short and to the point, but the message, the energy, the joy of the accompanying music convey far better than any words can what's at stake, the very essence of what makes our world worth living in and worth saving. Thank you.
Thank you very much, Pamela, for the introduction and providing the context for the rest of our speakers today. Before we move to the rest of the panel, I'm going to ask our other co-host for today, from the Office of the High Representative for LDCs, LLDCs, and SIDS, Rabab Fatima, who is UN Undersecretary and High Representative. Thank you so much for joining us today.
Thank you very much, Caroline. My good friend, Ms. Pamela Cook-Hamilton, Executive Director, International Trade Center, and I would say the real champion for the LDCs, LLDCs, and the SIDS. And it has been a great pleasure to partner with ITC on so many fronts. Thank you very much, Pamela. Excellencies, distinguished friends and colleagues, as I said, at the outset, I would like to thank ITC for organizing this meeting, and it's wonderful to be once again partnering with ITC on this event to highlight on the world's most vulnerable countries, the least developed countries, the landlocked developing countries, and the small island developing states. Together, it's a group of 92 of the most vulnerable countries. I would like to highlight how supporting the MSMEs in accessing finance can help these countries sustainably make the climate transition. Small businesses constitute the bulk of the private sector in the LDCs, LLDCs, and the SIDS, playing a critical role as drivers of local economies, including trade and structural transformation. However, small businesses face major constraints in accessing finance due to the difficulty in obtaining loans and other structural deficiencies. The International Finance Corporation estimates that 40% of the MSMEs in the developing countries have an unmet financing need of $5.2 trillion every year. Some studies show the value of unmet demand for trade finance in Africa to be over $120 billion and $700 billion in Asia. In Africa, $120 billion. Credit gaps in trade finance are particularly acute in developing countries, especially again in these three groups of countries, the LDCs, LLDCs, and the SIDS. Clearly, urgent action is needed so these businesses have the support they need to grow. Distinguished colleagues, to help small businesses fulfill their full potential as catalysts for the climate transition, there is a need to simplify regulatory processes and enhance access to finance. Although individual MSMEs have a small greenhouse gas footprint, they collectively constitute about 90% of businesses worldwide, therefore playing a pivotal role in achieving global climate action targets. Recent data suggests that over 80% of GHG emissions from large corporations stem from their supply chains, which are predominantly comprised of these smaller enterprises. MSMEs are catalysts for the climate transition as they can help cultivate green solutions, adopt green business practices, and create green jobs. They can also pave the way for greening and adapting to climate change across economic sectors, including agriculture, tourism, industry, and manufacturing, and energy. Decarbonization and transitioning to sustainable business practices can also offer vast opportunities for the MSMEs. Yet the lack of or limited access to finance is one of the most onerous barriers to climate change, and this must be urgently addressed. Further, the technology required to adapt to climate change is expensive, and MSMEs require practical and innovative solutions such as blended finance and green fintech. The energy sector is particularly important in the LDCs, LLDCs, and the SIDS. Only 56% of the population have access to energy in the LDCs, and 60% have access in the LLDCs, with huge disparities within countries as well as between urban and rural areas. While access rates are higher in SIDS, they still face major challenges in making the energy transition. Supported by technology, faster deployment of renewables can help to bridge the sustainable energy access gap, strengthen energy security, and support climate goals. However, a shift in strategy will be required to significantly increase access to accessible and appropriate financing to support clean or low-carbon energy initiatives. In this regard, public finance is crucial to de-risk and mobilize private sector investment, bringing new markets to maturity in these countries, especially for MSMEs. Currently, international public finance in support of energy is still concentrated in a few countries and on larger projects. Therefore, a concerted actions are required from developed countries, governments, and international organizations to support local enterprises in the LDCs, LLDCs, and SIDS, particularly small and medium-sized enterprises, off-grid developers, and the organizations led by women. Next year, dear colleagues, we have great opportunities. Two important opportunities are coming up. As Pamela mentioned, we will have the 4th Small Island Developing Countries Conference that will take place in Antigua and Barbuda in May. And then we will have the 3rd International Conference of the Landlocked Developing Countries, which will be taking place for the first time in Africa, in Rwanda, Kigali, in June. Two very, very important opportunities to put the focus on these countries. On this, oh, my scarf is falling. Huh? And the private sector will be a very important stakeholder in both these conferences. We are already engaging them, reaching out to them. For the SIDS, we have already an established platform, the SIDS Global Business Network, and the advisory committee group has been formed for the SIDS SIDS GBN, the Global Business Network. The first meeting of the advisory group was also held, right, Tishka, last month, or earlier this month, last month in New York. And we are expecting a very robust, good meeting of the private sector, including the MSMEs of the SIDS in preparation or in support of the SIDS conference. In fact, the Global SIDS Business Network will have its meeting most likely in March, leading up to the conference in the Caribbean. Can I announce that? In the Bahamas, most likely. So that is going to be held. So, and for the LLDCs, we have already set up the advisory group to support and prepare for the private sector forum there. We are expecting a large turnout there. This is the first time this will be taking place in Africa. And just to keep in mind that of the 32 LLDCs, 16 of them are in Africa. So it is very, very important. There is a great deal of excitement on the part of not only the governments, but other stakeholders, including the businesses. We have already held the first meeting of the advisory group, and many of the private sector entities from the region and elsewhere beyond that are there. Many of our UN colleagues, including ITC, they are part of the advisory group. So we look forward to working very closely with many of you in the lead up to both those conferences. And not only that, not only lead up to the conferences, but also seeing you, many of you, in Antigua and in Rwanda next year. With those few words, I would like to end my statement here. But again, I look forward to working with many of you closely, including with ITC, as we move ahead our agenda, our common aspirations and goals for these 3 groups of countries. Thank you very much.
Thank you very much, High Representative Fatima, for your comments. And actually, before I turn to our panel, I would just like us to reflect for a moment how incredibly lucky we are to have two such incredible leaders driving this agenda of putting the issues and challenges facing SIDS, LLDCs and LDCs at the top of the trade and climate agenda. We should not take that for granted. And I think the fact that both have spoken so eloquently on the role and importance of small business, both as drivers of innovation, as sources of employment and livelihoods, also sources of employment for women in many economies as well, and something that will drive trade in these economies as well, which will generate the investment and resources they need to invest in so many other challenging public policy priorities in these countries. So I really want to take us a minute to thank you again, and for putting on the table this question of how can we ensure we have adequate finance to address the needs of those small businesses. So we'll move to that in a minute and hear some great stories. But before we do, I just want to have another round of applause for our Thank you both very, very much. Thank you. So I'm now going to ask our four panelists to come forward, and you can join me on the stage. Please, we all. Yep, excellent. There should be a microphone for everyone there. Thank you, Dean. I think you're on this side. So we have a really great panel with us. I'll introduce the four of them first. The first on my far left is Jean Leon, who is president of the Caribbean Development Bank. Then I have on my far right, Maheshwar Dakal, who is the Joint Secretary of the Ministry of Forest and Environment in Nepal. And then I have Sonia Paiva, who is the founder and executive director of the Women Farmer Federation in Eswatini. And then finally, we have Sivendra Michael, who's a climate warrior and a youth negotiator from Fiji. So we have the diversity of SIDS, LDCs, and LLDCs represented here today. And so really looking forward to your comments on what are the kind of enabling conditions that are important for small businesses and your climate action. What are the sort of finance needs that you have, some of the most marginalized and vulnerable economies in the world, and what can be done to support such work. So I'm going to turn first to Jean Leon, President of the Caribbean Development Bank, to tell us some of what you're doing and what you see as the priorities around finance for small business and the climate transition.
Thank you very much. I think what we are doing first and foremost is painting a different picture of the world. Because I start from the very premise that because of where we are, because we have not attained what we've all thought we needed to attain, it's clear we do not yet have a proper picture. And so if we reimagine this a little, let's start with the topic of today, which is what exactly is trade? And I think if you ask the question, the first thing most people will say is trade is when you exchange goods and services between countries. But I beg to differ on that point. Trade, for me, is the bridge between production and consumption. In other words, trade is every transaction that occurs in everything we do. Goods, services, exchange between two entities. That is trade. And if you see it in that light, it means it includes transactions that are done internally, transactions that are done among groups, transactions that are done across countries, and therefore trade becomes the center of everything that we do. Full stop. So once you recognize that trade is the center of everything, then it means that the reach of trade is everywhere. And so the objective which drives us, which is the objective of prosperity of everyone, then makes a link that says there is no prosperity unless there is appropriate trade. And I think what we ended up with in Geneva in September is there would be no prosperity if there is no trade justice. And so that is the beginning, I think, of what the remarks I want to make are. If we are to reform, and reform the way we approach the world, it starts with reform of trade. And in that sense, I think there are two aspects to this that we need to recognize. Because trade is everywhere, then it means trade is solving a system-wide problem. Because prosperity, attaining prosperity, is a system-wide idea. It talks about joint burden sharing and joint responsibility of all parties, individuals, private sector entities, governments, external parties, markets, regulators. They all have a role to play to generate that system-wide approach that we are talking about. And so when we talk of reform, we have to reform each of the areas. So we need to reform what types of infrastructure will facilitate the MSMEs we are talking about. But MSMEs do not exist on their own. They take inputs from even micro households. They provide outputs to larger ones, and it feeds back to them in their own capacity as individuals. So fixing the MSME problem is fixing the entire supply chain. And therefore, reform is not just reform of the MSMEs, because they are linked, they are integrated. It becomes a reform of the entire supply chain. By extension, financing for MSMEs cannot be how do I fix finance for MSMEs. It has to be how do I fix finance for everybody, because everyone is linked to provide for the needs of MSMEs. And as MSMEs grow, then the rest will actually do better at the same time. The third part is capacity building. MSMEs cannot flourish without adequate capacity building, because they need to have the know-how, they need to have the skills, they need to have the technology. But where are they getting it from? Not necessarily from MSMEs. They have to get it from the rest of the system. And so the point I usually make is we need to see this as what levels an ocean. The water flows out onto the shores, but it cannot keep flowing out. It has to flow back. That is how you level. And so you need a similar analogy for how you handle MSMEs. There must be a push out and a flow in. And it is only when that works at the level of MSMEs as units and in the broader system, from the outside periphery to the inside center, which is the global state where things happen. But from the global center back to the periphery, that is the way you normalize and equalize. So genuine reform has to be reform of the entirety of the flow, from periphery to center and center back to periphery. If that doesn't happen, we cannot elevate and grow MSMEs. So trade becomes the center. MSMEs as a part need to be part of a back and ebb, a flow that integrates the whole. And if we don't have that systems approach, we really cannot talk about growing and growing in a particular way.
Thank you very much, and also really appreciate the idea of a systems approach, which is, I think, quite novel in this context as well. I haven't heard that kind of logic. And also, I wrote down, you said there's no prosperity without trade justice. So I think we can, one thing we often don't talk about enough, I think, in the discussions of climate and trade and climate and small business is the idea of the underlying inequality that affects what companies and countries are able to do in their trade and development agendas. So I'm going to turn next to Dr. Dakal from Nepal to give us a little bit of your experience working with MSMEs in Nepal and the effort to promote sustainability and trade as well. I think, yeah.
Thank you very much. First of all, I would like to my sincere thanks for inviting me. Actually, I fully agree with the previous colleagues what they said. For me, I am representing least developing countries and mountainous countries where trade and business and supporting the small scale or medium scale enterprises is really important, because always people think that climate change is a threat or challenge, and this is the right time. Rather, it is an opportunity, and creating green jobs and green business through the mobilization of local resources. In this regard, I would like to give two examples from Nepal. One is the community forestry, which is largely based on the local communities, indigenous people, they conserve the forest. But now we are not mobilizing those resources as a micro enterprises, and the forest fire is damaging the forest and even creating the emissions, right? That's why if we support the local communities through small scale support in terms of finance, resource, and then technology, if we support them, I think they can easily engage in their local business based on the forest resources, agriculture resources, and then they move forward with their lives and livelihoods and prosperous to them. Then they can create new jobs. Even the most important part is with creating further carbon emissions or other problems. That's why in the developing countries, the people are very much positive and enthusiasm, and they have some indigenous knowledge, but just they need very small support just to motivate them. And that's why in climate change conference here, of course, every party is giving the pressure is the $100 billion and doubling the adaptation goal or other means of financial support. But now this is the right time to find who is the real vulnerable communities and where they are, and how do we can support them, and what type of mechanism and strategy the UNCTAD negotiation process we develop is really important. That's why I'm fully favor of supporting the local communities through green jobs and green business based on the nature-based solutions. And it is the right time to think them and to support and build the confidence to the developing countries people that climate change is not always a threat, rather it is an opportunity to create new jobs. Thank you very much.
Thank you very much, Dr. Dekal. I think really wanted to thank you for the focus on how do we bring these finance and these opportunities to the most vulnerable communities. And it is true here, we hear about very big numbers at COP28 in the context of huge institutions, huge companies leveraging enormous projects. And in the end, the question that you have put on the table is how do we make sure we get that to the most vulnerable and marginalized communities and enable them to take the initiative that they already would like. They already can visualize it. It's not that they don't have this initiative of ideas and business opportunities and so on, but they need to be able to access the finance for that. So I hope that you're able to land that agenda on the right ears here in COP28 as well, that it's about making that real for very particular communities within countries as well. Because one could imagine that all of those trillions may flow, but they may flow right past those communities as well, and that's not what we need. So with that, I'm going to turn to two who have very direct experience working exactly with local communities. The first is Sonia from the Women Farmer Foundation.
Thank you. Good afternoon, everybody. I'd like to thank the ITC for having brought me here to COP28. I think it's been one of the biggest dreams of my life, and I hope I'm going to do my country and my continent justice in my brief speech. As I've been introduced, I come from the Women Farmer Foundation, and I wouldn't be doing justice to my people if I didn't have to bring something from my country that talks to climate change that talks to climate action, and that talks to trade. So I have brought a mango. And this mango here is green on one side, beautiful. And when you turn it around, you see the effects of climate change. This side of the mango, you get the morning sun. And this side of the mango, you get the afternoon sun. So what is the message from this simple mango? Most of our producers in our countries are actually the farmers. And our country relies mostly on the sugar production. But as I sit here, I am talking to the hundreds, if not thousands, of women that work in the fields and try and make a living. So I just like to reiterate one thing, that I'm not a doctor, I'm not a politician, I am an enabler and I'm a developer of people. And I work mostly with women and young ladies in our organization. So when one talks to trade, how can we trade with this mango? And a lot of people say, okay, we can do value addition, because that is one of the things that one looks at. And again, that leads to finance issues, because if you want to go into food processing, there's a lot of issues that go with it, and there's a lot of licensing and things that you have to do with it. And that also comes at a cost. And so I just need to read one thing so that I don't mince my words. The mango that I've just shown you is the planet. The eater is the people, and the processor is the trade, which is the economy. The integration of these elements, planet, people, and the economy, is what makes the triple bottom an indispensable tool for sustainable development. So, having said that, I know that I'm supposed to be a keynote speaker. There's quite a lot that we need to talk to, but for now, issues on the ground. We can all sit here in Dubai. Our women and our girls do not understand what we are talking about. They do not understand about policy. And all they want is to be able to make a living and make a difference in our own countries. So the message that I have from Eswatini is a simple one. After all said and done by our politicians, by everyone that has an interest in climate action, what are we going to do in our respective countries?
It really helps everyone imagine that there are real communities, real people sitting around with their families trying to make a living, facing the impacts of climate change, trying to work out how to make a profit, how to succeed economically in a very, very competitive environment without necessarily access to the finance and tools and enabling policy environment they need. So we need to do better. So I'm now going to turn, who hopefully will inspire us about how to do that better, is Sivendra Michael, climate warrior from Fiji.
Thank you, ma'am, and your excellencies. Thank you for the opportunity to have me here. I like how they call me climate warrior. I also would like to acknowledge I'm the incoming permanent secretary for the Ministry of Environment and Climate Change for the government of Fiji, and one of the youngest one ever appointed. So I'm quite honored to be here and going into this role as well, working with ITC quite extensively. So thank you for the opportunity. I think I would like to start by highlighting the facts that for the Pacific Island developing states, we are one of the most vulnerable. This is along with LDCs, this is in the IPCC reports, it's in the Paris Agreement under Article 9.4. And when we are constantly here in the negotiation spaces, we tend to hear so much about public-private partnership, but in essence, how are we supporting the smaller scale businesses within these spaces, and how are we taking their voices forward, is something that's not meaningfully translated, if I may say it in the most factual manner. So within these negotiation rooms, I guess it then becomes our responsibility. I would like to acknowledge as well, like, I am a son of a mechanic and a farmer. And so these are the very grassroots that actually, gave us the foundation to build us to where we are today. And it goes back to always realizing that within Fiji especially, research has shown, and Madam has pointed out all the facts about what are the percentages of MSMEs that represent the economy. So for the case of Fiji in particular, about 80% of the businesses which provide employment to about 60% of the economy is MSMEs. And during COVID, these were the actual businesses that were the backbone of how we continued, because trade was external trade. I wouldn't want to say trade. External trade was kind of closed, and it was decreasing. And so the very businesses that kept us alive, that kept our families going, the economies running, was the small and medium-sized enterprises. And I would like to really acknowledge that as well. So I think one of the biggest things that I want to bring to to my intervention is 2 points. One, which is as alluded to by Madam and both our speakers, is the change or the flexibility in the regulatory environment. I think having policy change and policy reform is one thing, but having it, adaptable in a way that is that MSMEs can grow or creates a, enabling environment for them is quite crucial. The second thing that I would like to really bring forward is the increasing recognition of social enterprises. And this is very crucial because in the Pacific, by large, where 90% of our economies is, relied on the ocean, 50% of the world's tuna production is dependent on small island developing states. These businesses are all classified as MSMEs. So you can imagine they produce 50% of the world's total tuna production, and they are the ones that are giving it to the bigger companies. So they are a critical player in this transactional transaction. So taking a step back, I've seen and witnessed how continuously, we did a research with UNCTAD as well, that within the green economy and the blue economy reform and innovative process, it is always the MSMEs that are coming up with innovative solutions. But the recognition of MSMEs in the social enterprise or as a social enterprise, we're still not there. The legislation is still not there. The environment is not there, to help them grow, to help them scale. So I always tell my small businesses in my own community, the first thing you want to do with your green products is to ensure that it is on the top shelf of your local supermarket. Let's start with that. And then we can progress from there. So I think this is an important conversation starter, and I think we can progress further because I think most of the facts has already been laid out by our keynote speakers on the role of small businesses and what it means for what they mean for the economy to thrive. And lastly, I would like to conclude by saying that I think there is a point that Sir has mentioned about from the Caribbean Development Bank about capacity building. I think for PCs particularly, the term capacity building, we are tired of fly-in, fly-out consultants coming to build our capacity. We have helicopter, you name it, ma'am. There is so much, capacity building done for MSMEs. I think they are innovative enough to think of solutions. We just need to make like you said, it's a packaged approach. So if we give them the packaged approach, which is enabling technology, the things that we're negotiating in this very space, the capacity building, the technology transfer, the transparency, the adaptation, the mitigation, we need to make sure that MSMEs' views are in this text, that we are creating the enabling environment. We are encouraging them to report, because at the end of the day, we are fighting about GST in the room, but we are not reporting because MSMEs don't have the environment to report. So I'll end with that. Thank you.
Thank you. So Thank you all for excellent remarks. I'm not sure if this is still on. Is this one working? Yes. Excellent. Perfect. Thank you. So we have just about 10 minutes left. We started a little late, so I'm just going to run for the 10 minutes. But what I'd love to do is to take 2 questions, because I'm conscious you're here. It's 5:30. It's late in the afternoon. You're here because you care about the subject. So if I'll take 2 questions, and then I'd love to turn to our panelists to go back specifically to this question about finance. And what do you know or that has worked, or what do you think, what's your message about what do we have to be thinking about if we want finance to work for these kinds of companies? I'm pretty sure you all have ideas on exactly what is needed. I know that, so we'll come back to that in a minute, but just meanwhile, there are 2 questions that I could throw in. No questions from the floor. Yes, please. If I can just encourage you to speak up loudly.
Sorry about that. My name is Josephine Akia Luyembazi, and I work with Participatory Ecological Land Use Management, Uganda. It's our network of civil society organizations working with smallholder farmers, so we call ourselves a business support organization. I began by thanking the 2 powerful ladies for sharing their knowledge, but also our panelists. And my question goes to the President. Back home, if there is anything we're grappling with, it's access to finance. For our smallholder farmers, but also for those that I would say would comfortably be called small and medium enterprises. As civil society organizations, we like calling ourselves a little bit of a brokerage role because we are supporting government to do their work. But the biggest hurdle that we face are the tendencies that come with access to credit, especially from your brothers and sisters, the financial and commercial organizations and the banks. The first is we are faced with literacy issues. So there's a lot of sign here, sign there without understanding what it is. The second is collateral. What are some of those ways that you can help us break down the barriers that are limiting access to finance that will enable us get to the trade justice that you described? Thank you.
Thank you very much. And also thank you for reminding us that this is a 2-sided issue. So there's how do you get those with credit and finance to make it available, but how do you support those who are looking for that to be able?
We just no longer need the consultants basically in the global south, less consultants and more from the global south. The message to me is clear 100%. Like I came from Morocco thinking I was a bit
reform in the way the system operates. So when you ask the question, how do you get, let's say, access to, in as much as the bank or banks are willing to provide you with the supply of funding, that supply is not on its own. It is a mirror of how they see you as a risk. And so in the same way I talk about a system, I think the way you manage that is to tackle these practices through capacity building, so that you are better enabled through productivity and knowledge to do a better role. That means you are bringing yourself up from that risk environment to meet the revised perception coming down from the banking side. Then the market works, and you actually will get access at an affordable level to meet the needs that you have. It's not a one-sided, one element approach.
Excellent. Thank you, Jean. Please, over to you.
I will just react quickly. I think that just to your question or your reflection, we cannot get everyone to COP. This is already the largest ever COP, and my reflection to that is you are the vessel of knowledge. So you should be in those spaces and advocate in principle. And just quickly, I think 3 points, less than 1 minute, leads to my second point. Contextualize it to the local needs and the local, that, you know, we have all these challenges with, in like
unmeaningful way. We need to really engage them.
Thank you very much. Thank you very much, Sivendra. Oh, yes.
And with the assistance of the organizations that have brought us here, I'm sure we can make a difference. But again, it's how and where we take this to, because it can end here at COP28 and leave for those that will remain behind. And it's all in our hands. Thank you.
Thank you.
Thank you very much. As I already said, based on the nature-based resources, natural resources, a very small scale of support in terms of investment assurance, whether it is from bank side or private sector side or government side, it should be assured to the farmers, the communities, and then much higher